All right, everything looking good on my end. What's up over there, New Pathway? Good to see you. All right, looking good. We are live. All right. Welcome back to the channel, Crypto Trend Trader, with our Wednesday evening market update, our midweek stream. It is 8 p.m. on Wednesday, 6/30, 2021 Eastern Standard Time. We are getting ready for our monthly close, getting ready for our half to close. But stream is just getting started. But before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right. He says it's doom time. Mark my words. Tip me later. So let's just jump in with the 10-year. So we did see a notable move today on the 10-year. While it wasn't a big move necessarily, it is a move back down to the lows right there. We have tested this low once, twice, and now a third time. Possibly even made a slightly lower low. At this point in time, I think it looks much more likely the longer we hang out at this support level that we break through it, which typically happens with all support and resistance. The more time you spend there, the more you're just basically eating away at that support or at that resistance, and then eventually there's no more buy orders or sell orders and you break through it. So in this case, it looks like the treasury is probably going to fall down to our next level. We do have like the heart line of the channel down here around like 128, but then we have our next fib level back down at like 1.12. It is possible that we go lower than that. It's also possible we get less than that move. We do have the measure move, which is the channel measure move right here, break of the channel to the downside, which is about like 1.32. I'm not sure how low this can go or how low it will go. We have our next like substantial fib level down here at like 0.95. I don't think it's realistic that we're going to get down that low. I mean, I mean, we would basically have to have a pretty rough situation, I think, like economically, for the rates to drop back down. I mean, it would have to be something crazy going on, like with this Delta variant, or some new thing, or maybe it'll be something completely unrelated, but some other crazy event. But I just don't think you're gonna have a lot of luck locking people down again, especially not going into the summertime. And while I think that you could argue there's a lot of danger still in like other countries, I think most of the places that really are in danger here have like super low vaccinations, or, you know, third world countries, like lack of medical health, whatever. Obviously, I am not a doctor. This is not advice on what you should do based on like doctor stuff. But I mean, the assuming the Biden administration is like telling the truth, you know, tons of people have gotten vaccinated. I think it's like over like 50 or 75% of adults or something like that. And overall, the efficacy of pretty much everything but the old J&J is just as good or almost as good on the Delta. So based on everything I've heard, I think it's extremely unlikely that we're going to have like a similar situation. Now, I know that there are like lockdowns going on in like Australia, and there's like talks in England or whatever right now, but again, I don't think it's going to happen again. I don't think it's going to be as bad. It would have to be something crazy like I don't even know, like power outages or hacker attacks that like crash the system. It would have to be something completely different that's like insanity, and then there's like everybody's got to go home and stay home and whatever. So I just don't think it's reasonable. So I think that all we're going to see from here is like tightening of Fed policy. So if it starts with like less buying as far as like mortgage-backed securities, or like you know, T-bills, like I think it's just a matter of time. And I think that's going to make rates go higher regardless of if they actually like push the rates up for the Fed fund rate, or if it just happens naturally in the markets. I know there's a lot of people talking about a new bond bull run happening. It's definitely a possibility. But I mean, the bonds have been in a bull market for like 40 years. So, I mean, much more like bond bull market do you need? I just don't think it's reasonable. So, but again, those are just my opinions. I could be completely wrong, and maybe there's something already looming that I don't know about, but I just don't think it's reasonable. So switching over to the DXY dollar index, we'll see that, obviously everyone has been calling for the dollar to go to zero. We have pushed back up powerfully once again. We're almost back up to those same levels last time where we were topping out. And, we have basically this little double top here, came back down, built strength in between the two 200 moving averages. The dark blue is the simple, light blue is the exponential EMA, and we have broken through that, and now we close just a slightly higher high on the day here, and I would expect us to continue pushing up. Next key target that I'm paying attention to is the 377 and then the 528. The 377 is going to come in at like 93.12 and the 528 at 93.775. And while we don't need to see a direct correlation between this and asset prices, typically you will see as the DXY pumps that assets tend to sell off. So it's going to be tough for assets to stay strong while the dollar is gaining strength, in the same way that I would expect tech to continue moving to the upside as long as rates are falling. If rates should suddenly spike back up to the upside, I would expect tech to sell off just because it's so highly levered and depends on those low rates. So, but again, there's not a 100% correlation between any of these things. It's just typically what happens. So, but at this point in time, we have had like a series of bottoming patterns on the DXY, and now here we are basically. You could look at this a couple ways. You could argue that this is like a left shoulder, that's the head, and this is a right shoulder. I don't like that. I think it's a little too messy, but you do have a fairly defined like neckline, or you could at least argue it. I look at it more as like a double bottom. This is basically your first bottom here. This is your second bottom. So the key area I'm paying attention to is right up between like the 377 and the 528, up here at like 93.2, because if we get the breakout from that level, that's going to basically take us up like another 4 points to the upside, which is going to put us roughly around like 97 on the dollar. And that's going to be like retesting some of this like key support that goes back for years and years and years. So we'll have to see. We do need to be careful though on the shorter time frames. Here on the daily, we have the sell signal at the top of the range, followed by the buy signal. We are in the bearish control zone. Very often what happens is we get that divergence signal, the sell, the buy, the sell, and then we sell off. It is possible that we sell off right now and basically double top right here, and we get the sell, buy, sell, come back down, reload, see if we hold that 200 exponential or simple as support, and then get continuation back up here. There's a lot of stuff that can happen. It's just a matter of, the small little moves versus like the big move. And, when I look at it on this chart right here, this looks very clearly like a bottoming pattern to me. We have basically talked about this a bunch of times, but we essentially have like double or triple divergence depending on how you want to look at it and what indicators you're looking at. We have clearly a low here, a much lower low, and then the same low here. Here we have a low, a much higher low, and then a much higher low once again. And then same situation here. We have a low, we have the same low, and then we have a much higher low, and then we have the low. We have a lower low, and then we have the same low again. So, that looks like, to me, bullish divergence, and I would expect this to move to the upside. And again, I think that move to the upside is going to take us somewhere. I think we're going to have trouble getting above the 200 exponential and simple moving averages on the weekly, but that's still up here at like 94, 95 roughly. We are also getting like basically what's about to be the cross between the blue and the purple Stoch. We have the knife angled pretty powerfully to the upside. And now here we have, a bunch of histograms in a row with bullish divergence. And now we have flipped the slope line over blue from below the zero line on the TJD TDMACD. And typically when we do that, we get like a decent amount of continuation. The last time we had that same bullish divergence show up right here was between these 2 points. Bullish divergence here, both coming out of the bearish control zone. And then as soon as we flipped that slope line over blue, we basically consolidated, got above all the moving averages, and we saw essentially from 2018 until 2020, like 2 years of continuation of the dollar strengthening. So I know that's the opposite of what literally everyone on earth is saying, but I'm slowly but surely starting to hear little drip drops in the background from other people talking about how the dollar could strengthen and why the dollar could strengthen. And it's like people are just slowly like kind of waking up and realizing that they may have been wrong this entire time, and that in fact the dollar is not going to zero tomorrow. So but that's our weekly. And then if we take a look at the we obviously have the cross as well on the 821 here. Let's switch over to the monthly, and you'll see here on the monthly, we were specifically talking about this. Am I missing something? Hang on one sec. Oh, I am missing something. For some reason, I was thinking that, yeah, so this has already flipped over. So the monthly on the dollar has already closed. I was thinking how many days were in this month, in case you were paying attention there, because I noticed this had flipped over to 29 days and 23 hours. So, yeah, so this has officially closed, and that's what we were talking about was the last monthly came down and touched the 200 simple here and closed never below the 200 exponential the last time we were at the moving averages. And now here, what we were talking about was when we initially broke through the 200 exponential, was it going to still wick down here, or was it going to find support at a higher level? So both those things happened. We actually found support at a higher level and double bottomed on the monthly right here. And we also found support on a higher moving average, because this time we found support at the 200 exponential, but we never even came down to the 200 simple. So this is what we were specifically talking about. Now for literally the first time in existence on the monthly chart, because, obviously it took from 2002 to populate the 200 exponential and simple moving averages. They have literally been in a downtrend, in a slope to the downside indefinitely. So in 2014, we saw the exponential turn to the upside. And then basically just now, just like in 2019, 2020, we essentially saw the 200 simple turn to the upside. So in the same way that we saw them roll over to the downside back here in like 2003, we're now seeing them turn to the upside officially for the first time. So, they were in an 18-year downtrend here. Price action broke above them back here, and then it basically found support a second time. And now, obviously if this area holds, we would expect, the equivalence of like, a decade, 2 decades of strengthening dollar. So, I know that that's contrary to what everyone thinks, but it is what it is. I'm going by the charts, not the fundamentals. But there's a fundamental argument that, before we can get a new world reserve currency, we need to have a new world reserve currency in place. And right now there's nothing in place. And, also, there's a lot of other arguments as well, like the majority of debt is denominated in dollars. So even if we were going to switch over to something new, the majority of those positions need to be settled in dollars. Therefore, there would be demand for dollars. Not to mention if, a bunch of currencies start weakening and the dollar can also weaken but stays stronger than those currencies, again, you would see strength in the dollar. So it is what it is. That's a fundamental and technical reasons why the dollar looks bullish. Could be bullish and is bullish. I mean, you can argue otherwise, but I'm more than willing to listen to someone argue otherwise, but I don't hear any legitimate arguments. So also, every time we've gotten down to the bearish control zone down here, we've seen a powerful move off the hard buy signal. And now here we are, literally, I mean, this is it. We're about to get the hard buy signal right here. They're touching tips right now. About to cross to the upside, about to leave the bearish control zone. The knife is angled powerfully to the upside. Everything says dollar strong right now. So that is our second green histogram in a row. Obviously, this is not closed yet. It just opened. So we'll have to wait 30 days for official confirmation. But after 2 green histograms to the upside, I expect continuation to last for quite some time. And seeing as how this is a monthly chart, we can wait 1 more month for official confirmation before a 10 to 20 year trend up in the dollar. I guess we wait for confirmation. We're also about to take out the parabolic SAR. It has been bearish since March of 2020. Back here, we have it powerfully coming to the downside. And now here we are with basically any further continuation. We'll take it out. And then if we can get above 94.6, we will be above all of the moving averages. So again, we'll have to wait and see how it plays out. But as far as I'm concerned right now, we are testing a key resistance / support. We saw support right here. We saw support right here. We saw support right here. It then acted as resistance once we were underneath it. Came back down to it. Found support here again. Got slightly above it, but then got rejected. And now here we are at that same level again. So I don't think we're just going to blast straight through this. I think we'll probably run into a little bit of a tough time, but essentially what we need to do is just come down and once again just put in a higher low, and we'll see continuation. As we now have like basically a confirmed double bottom on the monthly. Anything basically at or above 89 looks bullish at this point in time. So, and again, we have a bunch of things telling us we can expect strength and continuation to the upside. So, and then if we look at the monthly chart here as well, let's look at our lows. We have our low right here, and then we have our double low right here, and then we have our low right here, and we have two higher lows right here. So what is that? That's monthly bullish divergence. So now we have a bunch of bullish divergence telling us the dollar is going to strengthen, while literally everyone on planet Earth says the dollar is going to weaken and go to zero. So I'll literally take that bet that everyone else is wrong, and that there's literally a handful of us that are right, because typically when everybody's on one side of something, what happens? The other side wins. So we'll have to see. But again, I do expect short term on the daily, some weakness here sometime in the near future, as we are starting to print already a sell buy, and then probably going to print a sell signal as well. Does that happen before or after we push up to like 93.15? I don't know. We'll have to wait and see. But we're definitely at those tired areas where we could see some sideways chop. But again, we're about to flip over the 200 exponential and simple to the upside as well. So everything says bullish on the dollar, but short term maybe a little bit of bear action. So let's just do, we got quite a bit of cryptos to look at today. So let's just do our indexes, and then we'll jump over there. All right, so Dow Jones, while we have shown a little bit of weakness here, we have basically gotten back most of that move to the upside. We averted or crossed back the 821. So it did cross the downside here, looked weak, found support exactly at the 89. Not at the 100, not at the 74, exactly at the 89. So there is a reason that we use these specific moving averages. I highly recommend you do the same. Fibonacci. And then here we have the 8 and 21 are crossing to the upside right here. And then obviously we have found support on the 50 simple. So it looks like there's some decent strength coming out of here, but we do have to be careful because we have a low here, or I'm sorry, a high here with a rejection candle at the top. We have a high here, again, with multiple rejection candles right here. And then, potentially coming back up to retest that area as well. So, this is going to start looking like, I don't know what kind of patterns I have, a very clear resistance here at the top, and then, basically lower lows at the bottom here. So this is potentially going to start looking like a topping pattern, depending how this plays out. But we'll have to wait and see. Again, let's switch over to a little longer of a time frame now, since we do have our monthly closing here. That monthly candle doesn't look bad at all. Basically sold off pretty aggressively, got bought completely back up to where the month started. It's not a great candle, but to me, that looks like rejection of lower prices. We sold off, and then people bought it all the way back up to the top. So we closed basically at the open. We also closed basically at all-time highs. So that looks pretty good to me. Now we do need to be careful here, as this is the monthly, and we are up here at 96. This is like topping areas. Now we can top like this, kind of go sideways and top a couple more times, and this can last for months. It doesn't just have to sell off and go to zero. Same as like here, 97.7. So we're up there at those top levels. Not a ton of gas left in the tank, but that does not mean we can't just like hang out and go sideways here for like, a year or two, etc. All green histograms. We still have a blue slope line. On the monthly, the Dow Jones still looks good. Let's look at the weekly real quick. Weekly close doesn't look bad. We did get the divergence signal, sell by sell. We did exit the bullish control zone, while candlestick price action looks good, and we're able to basically like reclaim that 8 moving average. A bunch of red histograms in a row, and we are basically at the area where you would expect a bounce, and then typically this will get rejected and will actually continue to the downside. So I would have to say that shorter term time frames, like daily and weekly, like mid time frames, look fairly bearish, but the monthly overall does not look bearish. So daily and weekly bearish on the Dow Jones, well, I mean, honestly, you could even argue that the daily doesn't look bearish right now. You could argue the daily is like neutral to bullish. So let's say neutral on the daily, bearish on the weekly, and bullish on the monthly. S&P, the old SPY, the old spiders. We're getting the hard buy signal at the top of the range. I do not like this signal at the top of the range, but here you'll see we got that quite a few times in the past, and every time it led to continuation. But again, stonks only go up, so it doesn't surprise me. We do need to be a little bit careful of this divergence that's starting to develop here, as we have a clear high right here. We have a lower high right here, and then we have to see what happens with this next peak. We don't want to see this just roll over right now, because that's going to look like triple bearish divergence. But, you know, we have a bunch of green histograms. We're getting the hard buy signal, and while we're at the top of the range, we are inside the bullish control zone. And, you know, overall, I would say bullish candle, bullish on the daily above all moving averages. No reason to get bearish on this thing at the moment. We also are on the weekly, getting that sell by sell signal, a bunch of red histograms in a row. We have broken down to the slope line, which typically results in a bounce, which probably is what already happened. We do need to be careful now on the weekly that we don't start to see some weakness, as we have a very key slope line that I'm paying attention to. We have the yellow one that goes from the low down here in March, and then touches here, and then we kind of broke down from, and then that's like our initial parabolic slope line. And then from, like, you know, depending on what time frame you're on, this looks a little cleaner, but we have basically like some lows through here that we've been like finding support on as well. We broke down from that and slightly reclaimed it, but a lot of times you will see this get rejected, or it could be drawn just slightly different. Again, depending what time frame you're on, you could say we got rejected, we came up for the retest, and now we're breaking down from it. I think I drew this on the monthly, but overall on the weekly, again, I would have to say bearish on the S&P. On the monthly, looks great. We're inside the bullish control zone. We do need to be careful here once again, as we are up at like 96.3, which is typically the areas we top out at, but we don't have to just sell back off. We can literally just go sideways for days, weeks, months. But overall, I would say, you know, bullish candlestick, bullish, everything looks bullish right now. But we do have to be careful. We're at like literally the top of the range. We have a very clear channel going on through here. We found support every time we have sold off at like the heart line or like slightly below it, with the exception of the CVD drop. And now here we are all the way at the top of that channel. We hung out at the channel here, hung out at the channel here, cruised along it for quite some time, and now here we are basically a couple dollars away. I think that comes in line basically with my target for the year, which is like 4,600 plus on the S&P. So that's not unexpected by any means. All green histograms. On the monthly looks good, but we're definitely up at danger zones. Also going into the third quarter, typically, you know, third quarter is like the underperformer. So I'm not expecting a ton of movement to the upside. And also I would have to say not expecting a ton out of the indexes, like specifically or especially. But overall, S&P, again, looks decent. The weekly is a little sketch, but the daily and the monthly, you know, you could argue a couple things here and there, but bullish. IXIC, the old NASDAQ, little tech talk, them tech stocks. Daily, we are at all-time highs. We got the sell signal, the buy signal. We're still inside the bullish control zone. Eventually, we're going to get the sell signal again. It's going to give us that bearish, you know, divergence signal at the top of the range. But again, we got it back. We got it back here, sell, buy, sell, and all we did was have this little pathetic candle, found support at the 21, and saw a continuation. You know, got basically like two more little exits of the bullish control zone, and then we had a pretty substantial sell-off. A lot of that was like leading into basically like the calling of the dump back in February. But again, I mean, realistically, that was just, you know, we basically just topped out, came back down slightly below the 89 and consolidated into a bullish pattern. I mean, honestly, the NASDAQ measure move is up here at 15,700. So, you know, still quite a bit of continuation potentially in line here. We did flip the slope line back over blue. Daily, this looks good. Weekly, let's check it out. You know, and this is contingent on rates too. Like if we see rates all of a sudden jumping up, or the Fed comes out and, you know, all of a sudden they're super hawkish and like doves just start falling out of the sky, you know, that could change literally overnight. But as far as I'm concerned right now, you know, basically have same high right here, a high, a lower high right here, a high, a lower high right here. But now we're taking out that high here. I would suspect if we get any sort of continuation here, we take that out as well. We're definitely losing momentum on the TJD, TDMACD though. We're doing okay still on the Jewel Thief, and we're above all the moving averages on the weekly. So I would say on the weekly, this looks decent. We did lose this slope line, but you know, we'll have to see. Do we come up here and then get rejected and it rolls over, and then we start looking at these 2 points for bearish divergence, and the middle one is just like a little false signal along the way? We'll have to wait and see. But you know, again, weekly is kind of showing us a little meh, but monthly overall looks good. We are at the top of the range once again, closing essentially monthly at all-time highs over here in the bullish control zone. We are at extremely elevated levels. You know, typically this is where we top out. I mean, even if we just go sideways here. I mean, the real question is, what would you ever buy at these levels? And the answer is no. There's no reason to buy at these levels. You know, you could literally have bought anywhere else for months and months and months, and it would look better on the index, not specific stocks. But you know, this is where we top out every time. And does it top out and sell off 40%, or does it just top out and go sideways and sell off 10%? No one knows. All green histograms on the monthly, blue slope line, bullish control zone, above all moving averages, closing the monthly at all-time highs. Bullish. Everything looks bullish on the NASDAQ. Again, you could argue some of the shorter time frames a little sketch, but even I think honestly the NASDAQ is, if you're going to look at any of the indexes, I think the NASDAQ looks the best because it went into like a heavy sell-off consolidation period, you know, while everything else was like sort of catching up. So, you know what, it had a little over 12% on the index, and a lot of like the individual stocks on the side had like 40, 50 plus percent dumps. I would say the NASDAQ's probably the place to be, honestly, you know, if everything stays the same. The Russell, you know, Russell looks decent, getting the buy signal here, you know. Blue slope line, looks okay. Looks okay. Let's look at the weekly. I mean, pretty much up here closing at, you know, all-time highs. Getting the hard buy signal at the top of the range. Last time we got that, we saw quite a bit of continuation. The time before that, you know, it was from a lower level, but we saw quite a bit of continuation. Time before that, we saw a decent amount of continuation right before it died. So, you know, statistically speaking, you know, are we running into something like this where it just rolls over and dies like these 2 times? Or are we going to see, you know, some big fat continuation? We did lose the slope line here. It's still red, but histogram is below the slope. Bunch of red histograms in a row. So let's see. I mean, that kind of reminds me of like this type of area right before it dumps off here. Right before it dumps off right here. But, you know, we're not inside the bullish control zone. So weekly Russell looks a little meh. On a scale of 1 to 10, it's meh. And then our monthly inside the bullish control zone, bunch of green histograms, blue closing at all-time highs. I mean, it's hard to argue this is not bullish. Again, we are at extremely high levels, elevated levels. You know, we have, if you look at the amount of time on this indicator here, we've been above 93. Like, you know, you have like this little bit of a peak here, this little bit of a peak here, you know, this little bit of a peak here, this little bit of a peak here. You get the point. So like probably 99% of the time we're lower than this level. So we're in like the top 1%, and this thing looks like it's full on gone parabolic here. So is this going to be like a blow off top type situation? Probably, but could it continue up another like 20%, 30% before then? 100% could. It 100% could. Does it have to though? No. So we'll have to see. I don't love this fundamentally right now. Technically, it does not look bad though. I think the Russell's probably, I think it's the worst place to be index wise. But chances are, if you're watching this channel, you don't care about indexes anyway. You're probably more of a stock or crypto picker, which is obviously much better strategy. I think indexes in general are more for people that just want to like stuff a little money somewhere regularly and not pay attention to it. ICLN, you know, we saw this little breakout right here of our pattern. Let's get rid of the moving averages. We are above all the moving averages. Oh no, we did get rejected at the 200 simple. So we're above everything but the 200 simple. I would expect this thing to continue on up though. We broke through, don't mind this blue line. That is nothing. That's just like the overall pattern for like the 5-wave structure. But the purple line here was our resistance. The red line here was our resistance. We have clearly broken through that resistance. I would expect at least a bullish move, either the measure move up to that 0.5, the 618, or the 786. At that point in time, we can reevaluate. But right now, you know, we're basically just coming right back down to our buy, our entry point right here. So this is probably entering the bullish control zone above the slope line, all green histograms. Like a little weakness here is fine. I'm completely cool with that. I'm going to be looking to, this will probably be one of my entries for this week. 15% reward with 6% risk, 22% reward with a 6% risk, 6.5, whatever, and then 33 with 6.5. So this looks good. I want to say, I can't remember. I think I might have already entered a little bit on this, but nothing crazy. But I will probably be adding to this position in the next week or so, depending on how this price action looks. I would say it's pretty much confirming a breakout. Now, are we going to come all the way back down here though and retest some of these levels? It's 100% a possibility. You could argue we did already kind of break out, come back, retest, break out, you know, come back, retest. But a lot of times we'll see a little more powerful of a push down here, chase out a couple weekends, and then we'll see like that continuation move. So we may be able to get a better entry than this real time. Okay, so ICLN, and fundamentally, I mean, that thing looks good. Oh, let's look at a little longer of a time frame. It's been a while since we looked at this. Yeah, I mean, this looks like it's bottoming on the weekly. Bunch of green histograms in a row. Hard buy signal out of the bearish control zone. Looks like it's getting ready to pump it up. We do have to be careful though, because we did just lose the slope line a couple of weeks ago. Well, not a couple months ago. So this could easily come back down for a while and take some time to regain it. So we could just kind of go sideways in this. We basically hit my target to the downside though, within a buck or two. And we're really only up like 10% since then. Not that this is like a massive mover, but you know, if we end up getting a situation like this, see, this looks bad on the monthly though. You know, we're coming out of the bullish control zone. We got the hard sell signal now. Bunch of red histograms in a row. You know, this thing looks like it could easily sell off and continue to sell off back down to like the 0.5. Yeah. I mean, it looks bullish on the daily and the weekly, but I don't know if I'm ready to just like throw this thing in my old retirement and just forget about it. I think we'll probably get a better long-term entry into this, but I think for like a little scalp or a swing trade, we could do pretty well on the daily and the weekly. Yeah, so let's look at the XLE next. Yeah, XLE next. You know, energy has had a phenomenal little stint here already, so I'm almost at the point where I'm just not interested in this right now. But we'll see. It could easily get continuation. We already hit our first target on this, which was essentially like that double top right there. Are we going to get that next target? Are we going to get another push up here? Are we going to hit, you know, some of these higher levels? Maybe. I mean, I would love to see it come back up here and get to like 74 bucks, which is, you'll see the orange fib is from like the very top back up here to the bottom back down there. And that would be essentially 5-wave structure action. But, I mean, we could really fall short here. We could get up to like 57, 58 bucks and then fall on our face here and come down. And, you know, we really get something closer to like that. And then a deeper retrace. We'll have to wait and see though. Let's look at it on a longer time frame. Let's look at that weekly. Weekly on this bad boy. Pretty powerful trend. You know, we're in the bullish control zone, but it looks like we're maybe going to develop some divergence here. It looks like we have some bearish divergence already developing on the TJD, TDMACD, and the Jewel Thief. Think careful with this one. Let's look at that monthly. Monthly looks good. Bunch of green histograms in a row. Powerfully sloped to the upside. We're above the slope line on the TJD, TDMACD. Looks like it's getting ready to flip over blue sometime in the near future. I mean, this thing could this could look good. But again, what does that mean though? Does that mean we can't just go sideways to down for a little while? We could go sideways to down for like months here. You know, the daily and the weekly could just sell off and look terrible, and that would do no damage to this long-term chart. So I think honestly, we could see a little continuation to the upside here, but I do not expect it to get above 57.50 without reloading first, because we have a ton of resistance through here. That's a super strong support slash resistance, support slash resistance, support slash resistance. We're a couple bucks away, and you know, sort of an indecision, kind of like spinning top here at the top of the range. Are we topping out now? You know, maybe on the shorter time frames. Could we easily see continuation up here though, down the line for another 50% to the upside? Definitely, but I do not think that now is the time to be entering this. I think it's probably the other way around. I think it's probably time to think about really getting out of this one, taking profits. XLI, the old industrial sector. Are we going to be digging holes or not, ladies and gentlemen? Getting a hard buy, a couple green histograms in a row. You know, looking at the bigger picture here, you know, we're getting towards the top of the range here. We could see a little more continuation on the daily, but let's really just look at a little longer time frames. And you'll notice also, guys, that as we get towards like the end of the week, or specifically end of the month, I like to look at longer time frames and make sure we have the big picture view. I highly recommend that everyone does that, just because it helps to keep things in perspective. Because if you just look at like 4 hours or dailies or whatever all the time, you could be super bullish on something, and then all of a sudden you go to the weekly or monthly and you're like, oh shoot, this looks like terrible. So we've been operating inside this channel. You know, we had the little stab outside the bottom that I ignored right here, and the little stab outside the bottom that I ignored right here. Why did I do that? Because I like how this support looks right here. And a lot of times on like those big powerful dumps like this, and those are big powerful dumps, the kind that clog your toilet. You know, you almost get like running stop situations, or like the price just runs away from it. We could easily do a little different here, but oh, what did I do? It's not doing what I want it to do. Oh, I know why. Duh. I think I want to move this one. Nope, that's not it. Okay. It's because of the log scale, I think. So let's just move them all around for a sec here. Oh my God, what did we do? TradingView, what are you doing right now? Can we be friends? Okay, TradingView hates me. But look, let's just pretend we move this down a little bit so that it touched this little tip right here and touched this little tip right here. It would basically just move this heart line down to like right here and right here. So we could get like two perfect touches on the tips right here, but we would really just end up with a touch right here and a touch right here. And for that little trade, we would be giving up this touch, that touch, that touch, that touch, this touch, that touch, that touch, that touch, these touches here, you know, all these clear resistance touches, that little support touch. So in my opinion, you know, it's not always about drawing it perfect and going tip to tip. It's more about drawing it so it looks correct. So that, and especially on like cryptos and stuff where you have different exchanges, different liquidity, etc. You know, it's not going to always look perfect on one chart, but it might look perfect on another. So you want to kind of look at the big picture here, no matter how much TradingView hates you. But no, TradingView, if you're listening, that the feeling is mutual. I hate you as well. But you do a great job when you do it. But sometimes I want to just murder you. So yeah, XLI. At the top of the range here. I mean, we got to be careful. That's a topper. That's an old topper. We hung out here, though, for years at the top of the range. You know, top out right here. So we could easily get a little more continuation on the old industrial. You know, up here to like 120 or something like that. So maybe we get another 15, 20% move to the upside. Maybe we even just like bang our head on it for a while. But eventually you got to feel like, you know, there's just more probability of it going to the downside. Also looking at the weekly, bunch of red histograms. We have a crazy divergence signal here. You know, basically like we got our buy way back down here, and then it was like sell buy, sell buy, sell buy, sell buy. So we're basically just like chopping up the whole way here while we float up. This trade just got way too crowded. I mean, way too crowded. On the monthly, you know, we got a bearish engulfing candle here. So we got to be real careful about that. You know, when the body of one candle completely engulfs the candle before it, you know, it's basically like Pac-Man just swallowing that ghost right here. So, you know, that's not good. That is not good. It's not horrible, but often that will lead to at least a temporary pullback. So we do have all green histograms. We are in the bullish control zone, but again, we are at extremely high elevated levels. I mean, again, if we look at where we're at right now, 95.3, like we spent like a day there, a month rather there, like maybe 2 months there. And other than that, we have literally never been at these levels. So we're like at record highs on this thing. So it's not unrealistic to think that we're probably going to see some sort of prolonged consolidation or pullback. And, you know, if we look at the last couple times, you know, the last time we did that, we had a 30% pullback here. The last time we did it here, you know, when we were up at those levels, we put in some divergence and got another like, you know, 2 to 5% to the upside here, like 6% to the upside. But then it was followed by, you know, 20% to the downside. So that's a 10 to 1 negative risk reward ratio. I don't like that. That's not good. I'll take 10 to 1 positive. And then again, you know, we got a decent sell off from this point, 26%, came back up, took out the high. That was a throw over, hardcore throw over. Your boy was calling the top way back then. And what happened after that? 40+% to the downside. So like, I don't know, like if we get another 10 or 15% to the upside, is it worth the potential, like, you know, 30+% to the downside? Even if we just touch a heart line, 15%? No, thank you. I'll just dig holes with my shovel, sir. I'll go to the dollar store and get a plastic shovel and a bucket, and I'll just dig holes in the sand, and we'll save the real holes for later. But yeah, I mean, it's hard to make a case for that one. That was industrial. Financial sector, XLF. You know, we're getting the buy signal, a bunch of green histograms on the daily. We lost the 821. We lost it for the first time since back here in January of 2021. And then the time before that when we lost it a couple times on the way up here, but this is not particularly great. I mean, it's at all-time high levels, but I don't know. There's a lot of arguments. I could write a freaking thesis on why I don't like XLF long-term, like financial sector, especially if central banks are like getting more and more power. There's a legitimate argument for banks, like if they're not lending money and that's how they make money, and people are paying off all their debts and that's how they make money from overdraft fees and interest and all that stuff, and the Federal Reserve is potentially going to, like, you know, jump them in line and go straight from, you know, straight to the customers and don't need the middleman. There's a lot of arguments that banks are not really necessary in the future. And I think a lot of it has to do, you know, I think the Federal Reserve is like, hey, lend a bunch of money. And the banks are like, yeah, we don't really want to take a chance. And the Fed has done everything they can to try to accommodate banks. And the banks are like, nah, we don't want to risk it. And I think that is leading to actually like a lot of the problems we're having right now. So we'll have to see. Huge gap back here from November in 2020. Massive gap. Are we going to come back and fill it? I doubt it, but is it possible? Oh, yeah. Oh, yeah. You know, horrible divergence signal. Sell, buy, sell, buy, sell, buy. Sell, sell, buy, sell, buy, sell. One too many buys in there. Red histograms in a row. We have left the bullish control zone. The weekly looks bad. We bounced to 21. We've got the parabolic SAR flipped over here. We come back down, retest $35, and then after that, you know, it's basically it's a retest of the breakout. It's a retest of the high right here and the high right here. I mean, we're looking at like 31.50, 32. Looks bad. Monthly, you know, what do we got? Bearish engulfing, not quite, just hung on there. Looks decent on the monthly. Looks decent. For somebody else, not for me though. I don't want it. No. No. You take financials. I don't want them. XLU, utilities. I mean, this thing just took a dump. We talk about how bearish this is. When you see candles coming in like this, it's hard to get bullish on it afterwards. This thing just took a dump, tried to bounce, hit the hard line, dumped again. And you guys know how I feel about that. when we're at the top of the range, we come down to the bottom of the range, we come up to a heart line, and then we immediately get rejected to the bottom of the range, the likelihood of breaking out in that direction is extremely likely. So at this point in time, I would say that the likelihood of breaking out to the downside looks very likely on this. So where's that going to take us to? Measure move from the top of the channel to the bottom of the channel. We have broke down from the 200 exponential and simple. We've got the 377 and the 528. We've got the larger channel here trying to support us. But you know, how many times did we like take a stab out of this channel? 1, 2, well, big one back here, 2, 3, 4, 5. So, you know, could we easily come back down here outside the channel again? Yeah, like $60 down here. And then get a move back up. But again, I'm not messing with this. I mean, the percentage moves on this are like 0. There's no real reason to play with this, but still good to take a look at it. I mean, it's an important sector in the markets. So, again, I mean, perfect example of why the 528 is so important. I know I'm the only person in existence who uses the 528, but after like a move like this, I mean, if you're going to get a 40% move and it's going to be, you know, that ridiculous and that violent, you know, that powerful of a move to the downside, I sure do want a moving average that comes within, you know, literally like a freaking hair. You could argue that some of these indicators are useful. Overall, looks bad on the weekly. Hard sell, coming out of the bullish control zone, all red. We lost the blue slope line. I think we get this measure move sooner than later. And then monthly, let's check it out. Check it out now. Yeah, I mean, monthly, it looks like it's rolling over. I mean, it is rolling over. It doesn't just look like it. It is. It is. Looks like we're getting rejected at the slope line right here, too. We've already got one red histogram, so I think it sees continuation to the downside. And the truth is, if we get this little move right here, how likely is it that we're going to get the big move? Are we going to get, you know, the big boy channel breakdown? I don't think so. Not tomorrow, but eventually. Are we going to get it eventually? Probably, yeah. And where's that going to take us to? 200 exponential down here, like perfectly, and maybe a retest of that. I don't know. We'll see. I don't know if utilities are just going to crash like that, but there's definitely a couple things on the chart saying that they could. But again, just because something can happen does not mean it's going to happen. But it's very important to at least have it in perspective, just in case it does. Oil's just kind of consolidating here at the top of the range. Looks like it's about to get, oh, it already got the hard sell signal. It looks like it's potentially going to, first time the blue bounced the bullish control zone. Now it looks like it's just going to keep going. The knife is like sticking down there. Bunch of red histograms in a row. I suspect oil is probably going to cool off here for a little bit. You guys know that I'm looking for oil to come back down and potentially like retest a breakout. It basically broke out and cruised up here. Now, because of supply and demand dynamics, maybe it doesn't get down that low. Maybe it crashes. I don't know. But I doubt it. I mean, I doubt it. We'll have to see, though. Let's look at a little longer time frame, though. I suspect it looks better, though. I hate this chart. Bullish control zone, all green histograms. Definitely some potential divergence, but this thing could easily just cruise up here and take that out. I mean, it's going to be hard to get to higher levels than 95.5, but it's definitely possible. A little continuation, and we're there. And then the monthly. It's so hard to chart assets on TradingView when they go to negative 40. Bunch of green histograms, blue slope line. I mean, again, on the monthly, we're at like the top of the range here, 94. You know, this is obviously that same spot. God, are we at all-time highs on this thing, on the indicator? Man, that's wild. I mean, there was a couple times it literally went to 100 and just went sideways. So, like, is it possible that that happens again? Sure. I mean, that was for years. That was from 1967 to 1981, and from 1946 to 1958. So, you know, those are like decades of just sideways price action at 100. But again, you know, those are like, does not happen often, but it is possible. So overall, I would say, I don't know. I don't think oil is going anywhere. I think we probably go sideways to slightly down. But you know, what's a 10% move down in oil? We're at 50% of our all-time high, and I suspect that oil's probably just going to go higher. Eventually, I would expect in the next 5 to 10 years, oil makes a new all-time high. Because in order for all the new green initiative type of stuff to happen, we're going to need oil and we're going to need nuclear power to build all this stuff. And we just don't, you know, it's the same as like the dollar. When I argue that before the dollar can be dethroned, someone else has to like grow up and get ready and like, you know, approach the throne and like make itself like known. I don't see that right now. I don't see that. Not anytime in the next 2, 5, 10 years. And it's the same way with like all this clean energy and alternative sources of energy. Unless there's like cold fusion, I just don't know about it. It's possible. It's on the low though. I've seen some flying saucer videos. Not sure I believe them, but hey, maybe they've got that cold fusion. They're getting ready to bust it out and oil goes to zero. But honestly, I doubt it. So yeah. But maybe Biden knows something I don't. I honestly doubt it though. I don't think he knows how to tie his own shoes or what's on those note cards. But again, what do I know? So yeah, I'm going to take a quick second, jump over in the chat, and then I think we'll go ahead and just rip into crypto next. We have a extensive list of cryptocurrencies. There's quite a bit happening here. Is it bullish? Is it bearish? I don't know. Could it be both, but on different time frames? Probably. And then we got a bunch of shitcoins to look at. No offense. I got a bunch of requests from the group, which is now open. If you're not in the group, but you would like to be in the group, and you have not hit me up, hit me up. If you have hit me up and I have not responded, hit me up again. It was not intentional. And yeah. And if you can't figure out how to hit me up, just ask. It's not that hard. So yeah, let's see what we got going on in the chat. So what's up, New Pathway? Sean CZ says, we've entered into natural selection phase of COVID. No one cares anymore. Yeah, exactly, dude. Exactly. 100%, man. And I mean, it's different everywhere. I know like a lot of you guys are international, but where I'm at on the East Coast, dirty south of the US of A, and I don't mean dirty in a bad way. I wouldn't live here if I didn't like it. But down here, man, we're like #1 vacation spot, like Googled right now. So like everybody and their mom's coming down here because we got freedom. We're dishing up freedom by the pound. There's one thing we got down here, it's freedom. And if there's two things, it's freedom and buffets. Slam that like button. Yeah, CW. CW's right. He's on to something, guys. Like it, love it, and if you want some more of it, you better smash that button. Give me a sub. And you guys know what I say about them subs, man. Start gathering up your four-legged friends. Make an account for your cat. Start putting cute cat videos on there. You'll probably have more subs than me. But if you do that, make sure your cat likes my channel and subscribes as well. Our kit's in the house. K Ritz is supposed to show up later. Good evening, my man. Good to see you. K Oles 93. Big time toilet clogging, man. Yeah, you're not kidding. And Sean CZ says, when you factor in what you're seeing in cat and deer, it makes perfect sense. XLI looks rough. Yeah, and deer has been showing quite a bit of strength since its little sell-off, and cat's showing a little bit less strength. And I mean, the real question is, do you like green or yellow better? Because that's basically what you trade cat and deer off of, I think. Well, I think they have earnings and stuff too. It's not like crypto where you just pick your favorite color or name or emoji. CTI is definitely trash. And hit Disney today. Nice, man. Trying to do my best to support the economy. Wait, do you mean like you punched a Mickey Mouse or like you went to a Disney amusement park? Because those are two entirely different things. One is supporting healthcare and the other is supporting tourism. So I don't know. I'm assuming that you went to Disney. In which case, hell yeah, man. I mean, the weather's nice right now. Like, if you're ever not going to be scared of a flu-like situation, probably in the middle of summer. He says both. Hell yeah, man. You know what, though? If you're going to lose your shit and just punch something or someone, it should probably be like a mascot type situation, you know? Because I think everyone wins in that situation. It's always funny when you see a mascot get punched or punch someone. And then also, they've got those giant, like, padded heads and everything. So I'm with you on this one, man. You have my full endorsement. For everybody out there watching, good to see everyone. And I think it's time to jump into the cryptos. But before then, I'm going to take a drink. Don't forget, or don't let me forget to look at tech tonight too, because there's a decent amount going on over there. Okay, so Bitcoin futures first. Man, not much has changed here. We basically cruised back up to the 200 exponential, got rejected, came back down to the 200 simple, and closed there. We now have technically, now we're technically below it, but we're at it right now. I just expect it to continue going sideways. We do have, though, and this is our stream name right here. We have 1 point of divergence. Again, I don't even have to talk about divergence anymore because now everyone's talking about it. But we have 1 divergence here, 2 divergence here, 3 divergence here, 3 bullish divergence. So I would expect us to move back up to the top of the range. Where's the top of the range? There's a million ways you can draw this right now. I would say anywhere from 38,735, like this little close right here. I would say potentially as high as 40,000 right here. Or if you're going to get super bullish, and you get up into like the 42s, might as well just go to like 47, 48. Fuck it. Round up. Let's call it 50, guys. And then if we get up to 50, might as well just go to 60, 70, 100. I think 100's pretty good. But we'll see. We'll see. We'll take it one step at a time. It's not just going to happen in one single candle unless Jeff Bezos just goes all in on crypto. Jeff Bezos just spends it all, minus 1 trip to space. 1 ticket to space and all the Bitcoins I can afford, please. Thank you, sir. So yeah, that's our daily. Daily looks decent. Here's the thing. On the daily, we're unable to basically get and close more than, we want to see an open and a close above the 8, which is not happening. We want to see an open and a close above the 200, which is not happening. But we're also just kind of hanging out here. So the 21 has basically rejected us here and shot us down lower, and it's rejected us here. So what we're paying attention to now is, do we get pushed down lower again? Because every time we got rejected previously, we basically put in a low, a lower low, a lower low. So we just don't want to see it come down and put in another lower low. But if it does, we want to see another drive of bullish divergence, in which case eventually we would expect some kind of powerful move to the upside. That's our daily. On the futures, we don't like this. We are still crossed to the downside on the 821 weekly. This is not a surprise. This is not a surprise. We have a bunch of parabolic SAR, binary pivots. No, parabolic SARs, red. We have a divergence signal, sell by sell, leaving the bullish control zone. We have all red histograms. We are now inside of the bearish control zone. So while we're at the bottom of the range, and you could argue this is a time for, value investing if you want to buy some more corn. But at the same time, the bears are clearly in control on the weekly. Powerfully in control on the weekly. There is like literally no signs of life from the bulls right now. We basically smashed down, got a pathetic dead cat bounce, and then got smashed down again. And then this so far is the strength from the bulls. This pathetic little green candle right here. This itty bitty little green candle right here. So this is how much strength the bears have. All this. And then this is how much strength the bulls have. So it's hard for me to get bullish on this. It still looks like a giant head and shoulders pattern potentially playing out right here. Is it possible we go sideways long enough, find some strength, and continue back up? It is 100% possible. But does it still look like a gigantic head and shoulders pattern that is getting ready to crush your hopes and dreams and Michael Saylor's nuts? It does look like that. It does look like that. And not in a good way. Well, I don't know. Maybe he's into that stuff. He's probably going to run away with it and fake his death or something anyway, so who cares? He'll be fine. Even if Bitcoin goes to $1, he's got like 100,000 of them, so he's still doing pretty good. Futures on the monthly. Look, we got that hard sell signal. We now have a third red monthly histogram. Well, technically 2. That's our sell signal. That's it, guys. On the monthly, not good. So let's see what happens here. We got down to the 8 moving average, closed below the 8 moving average, and now we have a confirmed open and close below the 8 moving average. We have red parabolic SAR up here. We have a hard sell signal, and we have a bunch of red histograms. We have exited the bullish control zone. The bears are in control. I repeat, the bears are in control. They are literally tearing a bull apart right now, eating it to death, and the bulls are doing nothing. The bulls are literally doing nothing. So maybe we see some strength from the bulls here, but it's looking more like a little matador type situation. But again, that's just only on the weekly and the monthly. On the daily, it looks okay. There's some bullish divergence on the daily, so let's see what happens. Okay, and then we're seeing a little different of a picture here from our spot market, which this chart looks like someone threw up on it. There, that's a little better. Moving average wise, we came down here and bounced the 377 a bunch of times. We touched the 528. That 528, that's a thing. Somebody should put that on an indicator and just put it up on TradingView for free so you could use it, because it seems like it works. If only. We're getting the buy signal on the daily. Again, a bunch of drives of bullish divergence here because we're getting lower lows on price action, higher lows on the oscillator, higher low on oscillator, lower low on price action. We're in between the 8 and 21 here, but we are well below the 200 exponential and simple. The 200 exponential has a very strong slope to the downside right now. The last time we touched it, we got rejected hard. Could we still get a powerful push up to 44,000 or higher? You know, even up to like 48, 49,000. We 100% could. And honestly, I think that there's a decent likelihood that that happens. But got to be real careful. Real careful. And honestly, I think that's an opportunity to sell into price action. Again, looks like a gigantic head and shoulders pattern playing out. We have a very clear neckline support down here. Let's turn off the moving averages and turn on the drawing tools. We've got a very clear support down here. There's a lot of different ways you can draw in this price action too, depending on what exchange you're looking at, etc., etc. There's a lot of arguments to be made for this. But here on the weekly, we do have a very clear low here and a low here, and then a higher low, lower low. So bullish divergence on the weekly, that's again a good sign. Hard buy signal on the weekly. Could it just get rejected and sell back off? For sure. Could we get a situation like this where we see like a little dead cat bounce and it just rolls over? For sure. But there's something there. There's something there. It's worth paying attention to. Let's look at the weekly and turn off the drawing tools. I mean, we're well below the moving averages, but, you know, we're trying, guys. We're between the 8 and the 21. Or, I'm sorry, daily, rather. Let's look at the weekly now. We've got the cross, 821. That's bad. We've got the divergence signal. We've got all red histograms. We've lost the slope line. We're inside the bearish control zone. This looks a lot like the futures chart right now. We're finding some kind of support off the 50 exponential, 55 exponential. It basically just looks like we got a dead cat bounce and got rejected. So weekly does not look good. And finally, if we go to the monthly, we closed below the 8. We got rejected. We've got parabolic SAR. We've got the hard sell signal. Sell by sell, you know, from the top of the range right here. Bunch of green histograms in a row, followed by 3 red histograms in a row. You know, we still have the blue slope line, but, you know, we could easily come back down here to like 15, 16,000. I mean, this does not look good. It does not look good. Unless you're like a glutton for punishment, then it looks great. I mean, this looks, you know, hard sell signal coming out of the bullish control zone. Bunch of red histograms in a row. What's that look like? It looks like this. Come down into the bearish control zone on the monthly. Bottom out after a year of going sideways to down. Same thing. You know, come down here. Bottom out after like a year of going sideways to down. Could we still have a higher high in the bag for Bitcoin? We for sure could, but it doesn't look great. Does not look great. On a scale of 1 to 10, Bitcoin looks like a 3 right now. But on shorter time frames, it's promising. Daily and weekly, there's definitely something there. But that does not mean that we can't get another weekly push down here, put in another low, a lower low, and then get bullish divergence plays out on the weekly and we get a push up. It also could, the bullish divergence can play out and just be pathetic as everyone loses hope and Michael Saylor is left by himself holding the bag. Like by the end of this, Michael Saylor will own everyone's Bitcoin and it will be worth nothing. And we'll be happy. All right. I'm going to take a quick break and then we can jump into the rest of our cryptos. All right. Oh, if you're just tuning in after our little break there, remember, it's not financial advice. I am not your financial advisor. These markets are extremely volatile. Please do your own research. Trade responsibly. What's up, Bubbly? It's good to see you, my man. Past your bedtime. I know that's right, man. Time zones are a bitch. Midday here. Well, it's past your nap time. All right, let's keep going. Good to see everybody active in the chat there. Oh, we got another Bitcoin chart. Some more corn to look at. Yeah, we could look at this one. Got a couple different indicators on it. We got the Fisher Transform here. On the daily, does not look bad. One could argue that it's bullish. Starting to gain a little strength here. If we continue to see these green bars show up, we could potentially start getting a little strength here and see a blue slope line. Also are seeing a little bit of positive price action on the on balance volume. Not bad, not bad. Weekly still powerfully to the downside. It's gaining strength to the downside. So even though we're seeing some orange bars show up here, the slope line is getting elevated. So it's like when it's yellow, it was losing slope. You know, when it's blue, it's gaining strength. Yellow, it's losing strength. So it was gaining strength to the upside all through here, and then it's losing strength to the upside, and then it starts gaining strength to the downside here, and then it kind of went sideways a little bit, and now it's gaining strength again to the downside. So got to be careful on the weekly. That just means basically what happened. Okay, we moved all the way up to the top. People wanted to take profits. That's what Wyckoff distribution is. They distribute. We break down to the next level. and then we go sideways again. They hold price up here on this flatline support. We continue to sell, sell, sell. People get bullish, get sold into. We end up back down here again at that same support level. Eventually, once enough coins are sold, price just falls down to the next support level. Where is that going to be? Probably somewhere. I mean, we got like a little support action at like that 20,000. That's a key level. 24,000. I would say 18 to 24,000, but realistically, like probably 20,000. Nice round number, previous all-time high, etc. And again, look at that on-balance volume. Massive uptrend, break down below the slope line, rejected, rejected. What's going to happen next? Does it roll over here and then flip red when we lose that slope? That is not good. That means that not only, this is important, these indicators are important, these take into account volume. So here you have with the on-balance volume, we're basically taking the amount of buying and the amount of selling and then figuring out, is there a net amount of buying or a net amount of selling? And then we're subtracting that number from the overall number. So if we end up with a net buying, it gets added to this number right here, and the blue line keeps going up. If we end up with a net sell, volume times price, we end up with like these little like purple looking little lines right here, and we start selling off. And then the green line, all that represents is the slope of the trend. So once we got up here and we had, you know, all buying taking place, no one selling, we go parabolic. Then we start seeing some selling, more buyings taking place, start seeing some selling, more buyings taking place. Then there's more selling than buying, because now we put in like a lower high here, and then there's more selling taking place here, and then a little bit of buying, a little bit of selling, a little bit of buying, a little bit of selling. But now this is potentially going to roll over. That means there's net slope line. There's more selling taking place net than there is buying. So eventually this is just going to keep getting subtracted and go down. And this almost always is just in a straight up uptrend, because it means there's more people buying, but not just total buys. It's the amount purchased times the price. So it's volume and price combined. So when we go into a bear market is when we see the red slope line, because there's just net more selling taking place. And then we go into these long periods of just extended buying, and then, you know, short period, bear market of selling, then long buying, then bear market of selling. So we do not want to see this flip over right here. I mean, it's very, very hard to argue that once we break down from this level, if this slope line flips over red, that we are not in an elongated bear market, especially on a weekly chart. So, and keep in mind, if you're paying attention to, you know, what the time frames are here, you know, this is the bear market from 2014 right here in red. That's our bear market right there. This is our double bear market situation that took place in like 2019. So, you know, we'll have to see, man. But this is starting to look like a situation like this, where we bounce down, sell down under it, kind of get rejected, start flipping over the slope line. Maybe we just go sideways for a year, but eventually, you know, 50% capitulation. But it's weird timing wise, because we were talking about cycle analysis a little bit in the chat, and we could, you know what? Let's do something different today, guys. You guys want to do something different? You want to do a little cycle analysis? We could do that. What chart should we do it on? Let's do it on this one. What is this, Bitstamp? The old Bitstamp. Let's clear this off here. We don't need none of that. Let's get rid of these moving averages. Get rid of these moving averages, and let's draw on our chart. All right, so this is a pretty simple thing to do, cycle analysis. Time cycles, because we know, everybody knows Bitcoin has a 4-year halving cycle. That's in the code. That's the whole idea of it. The idea is that every 4 years the supply gets halved, so the mining difficulty adjusts accordingly to the amount of miners that's on it, but the actual reward that you get per block successfully mined is cut in half. So it leads to basically automatically a 4-year cycle. So let's take our, where's the old time cycles at? There we go. So this is our top from 2013, and then we'll draw it out to our next top, which was 2017. So they're basically 4 years apart. This is December 2013. This is December 2017. And then you can argue now that these are going to be our tops every 4 years, almost perfectly 4 year from top to top. So that puts our next top, theoretically, like the end of December, beginning of January of this year. So that's why I say there's a potential we could get a situation like this where we have come up, topped out, we go into a prolonged kind of like sideways period like that, and then we go parabolic one last time. It also gives a little argument to like this not being a blow off top, as where we previously did like a little more of a blow off top. Let's do the same thing again, and then we'll do it for like our bottoms. So this was our absolute bottom right here, and then this was our absolute bottom right here. So let's switch that one to blue. Can you guys see this? Should I make them bigger? I mean, since there's nothing else on the chart, we could probably get them a little thicker and thick lines. So yeah, that's our bottom right here, was in January of 2015, and then once again our bottom was December 2018. So basically, so basically the 4 years apart, almost exactly again. So then that would put our bottom for the next bear market in November of 2022. So roughly another year from when we top out to the bottom. Now again, that's only 2 points of reference, so it's hard to use that like definitively, but you know, you could argue that that's what's going on here. So we need to pay attention to that, and then that can give us a rough idea as to what we're looking at. What else can we look at with time cycles that would matter? We got our tops, we got our bottoms. You know, that's definitely, I mean, there's not a ton you can do for Bitcoin, but it's definitely useful just to get a rough idea as to what you're paying attention to. And then I don't think it goes back far enough. I think we would have to switch over to the Brave Liquid Index. Yeah, that's 2013, and this is 2015, so it would be like just off the chart basically. But yeah, so you can get kind of a bigger picture as to what's like potentially happening there, what could happen. You know what? We haven't done this for a while. Let's do something else on here. If we take from, there's a bunch of other different like trend line kind of like analysis type stuff you can do, but if we basically take from, let's look at our low here. If we take from like our low and then connect that to like the next low, we can kind of see what's going on here. Now in this case, it's not quite like perfectly clear, but I like to use basically something similar to like this, where you come down from like your little low, you could come right there. Again, this is kind of subjective because you're looking at log scale. You could draw it more like that and just have this not count, not do anything right here. But if we're kind of going from low to low, that's essentially like our low area right here. That's our low area right here. That's a bounce off of it, a capitulation bound below it, and then resistance. So, you know, realistically, could we just come back down to this at like our 27,000 range, kind of touch on it, maybe even get like a little spike below it, but find support? I think there's the high likelihood we could get some kind of situation like that. There's also ways you can do it where you connect like from tops to bottoms. You can do from your top right here. This is another way I like to do it, which was how I was able to capitalize on the COVID sell-off. Oh, fuck, I said the magic word. Shouldn't have said it. So this is from our top right here in 2013 to our bottom right here in 2018. And then it bounces again in March, the big sell-off, basically perfectly off that line. So you could try, I mean, you can't exactly figure out what's going on here quite yet, you know, but once we have another point, we can argue, you know, basically where we're coming down to or whatever. You will notice though over time that the slope of the lines will become less and less like substantial. So once we have our next, see, this will be so much better once we have one more point, like one more low, one more bear market low, you know, because I would expect it to basically be, you know, wherever that bear market low comes down to. Let's say we don't do anything crazy. Let's say, you know, the low ends up like down here at like, you know, 20, what? Let's say we top out up here higher, come back down to roughly like 20. We don't want it to be below our previous low because we've never done that before, our previous high. So if we topped out at 20,000, by the time we get up to like 100,000 or $250,000 this bull cycle, assuming that happens, which it probably won't, it'll probably go to zero, but assuming it happens and we go up some crazy spot and we come back down, we would expect our low to be somewhere above 20,000 because that was our previous all-time high. And obviously in our previous bear markets, we did not come close to the cyclical high from the previous time. So what I'm expecting would be, you know, we go parabolic up here to, you know, whatever, $100,000. Let's just say roughly 6 figures. Get that big boy, them big bucks, them Bitcoin bucks. And then we come back down and we find support somewhere above $20,000. You know, we would expect some kind of slope line like this roughly from bottom to bottom, at which point in time then we would take from our top here. And again, this is all hypothetical, to our bottoming point right there. So again, using that time cycle analysis, we draw from, just to make it easy, you draw from the top of the red of one cycle to the bottom, which is the blue of the next cycle. Top of the red from one cycle to the bottom of the blue of the next cycle. And that should connect with the slope line from the bottom of one cycle to the bottom of the next cycle. And then in this case, our hypothetical slope line is the bottom of this cycle to the bottom of that cycle, which again, that's assuming roughly that we were going to get something like $20,000. You would honestly assume that it would be higher up and that it would be somewhere like this. Does that correspond with this little bumpski right here? And that's like, you know, something like this going on here? Maybe. You know, again, this stuff's all hypothetical right now, but maybe we move it up there and maybe we've already reached, that's our low of this cycle. And then when we come back down, we just sort of get like a little double low. I mean, there's lots of ways you can do it. But again, it's at this point in time, we don't have enough data points. If Bitcoin was, you know, 2,000 years old, we could do a lot better, cool, like technical analysis on it. But there's no assets that go back 2,000 years ago that are stores of value, you know, that you can just like throw in a bag in your backyard and bury it, and it can like store value for 2,000 years. Nothing like that exists. If it did, you know, we could get a better idea what's going on. But since there's nothing like that, and Bitcoin is the only store of value, and everything else is trash, we have to just hypothetically do it. So, but when we come back to this in a couple of years, after we get our top, we can see, oh, did we top out around the same time again? Is that too predictable? Did we bottom out around the same time again? Is that too predictable? How does that correspond with some of our other like parabolic trend lines? You could argue too, I don't love doing this one, but you can do it from like the top to the bottom type situation here. So the bottom of this area through the next bear market and then touches like the top. But again, it's very hard to do. But the bottom of this area right here through the bottom of the next bear market and then touches our top. So, you know, where would that be at? It would have to be somewhere like just crazy up in here. I mean, again, we just don't have enough points really to do it at this point in time, but eventually maybe we will in the future if Bitcoin doesn't die. Okay, so that's enough playing around here, messing around with them charts, doing crazy stuff. Let's look at this though while we have it up here and just look at these moving averages on the big picture in reference to our time cycle analysis. Our top right here, we then sold off and touched the 21 and then bounced it, and then look at the exact cross of the 821 on the monthly was the exact bottom, okay? And then let's look again. Watch, I'm about to blow your mind. About to blow your minds. Same thing happened right here. You come down to the 21, come down to the 21, you know, try to bounce it. Well, we didn't quite get to it right here. Try to bounce it though, and then come down and roll over, and then look at where the 821 is crossed right here, absolute bottom on the monthly. Look where the 821 crossed right here, absolute bottom on the monthly. What? What's happening? So maybe, just maybe, I mean, if this thing, let's be honest right now, if this thing starts to sell off right here and does what it did right here, there's no way. I mean, we do not want that to happen, because that would mean this goes sideways and then eventually breaks down from it and then comes down, and then we get like the cross and we're at like $12,000 or $14,000. So let's realistically hope that one of two things happens. Either Bitcoin does something completely different here, we keep going up in price, or else we're going to be back at like $12,000 to $14,000. So, but again, that kind of brings us back to the theory that this is a 1, a 2, a 3, a 4, a 5, and then we're going to retrace the entire move from $2.20 up to $64,000. But I mean, let's be real here. We're just drawing stuff on the chart. None of this matters. TA doesn't work. I use fundamentals. Fundamentals are the only thing that matters. And Bitcoin is taking over. All right, so let's look at the old doggy coin. Man, this is like, I feel like the cult is dead. They must have all got liquidated or something, because we bounced this key support right here. High, lower high, broke down from that same key support right here. Found some support at the 200, moved up, and we cannot get above like what I would call like the neutral line right there. This, like, I mean, you could put it, you could move it around a little bit, but that's how I like it. So this is our blue line right here. That's what Dogecoin needs to get above. Right now we moved up to it, got the hard buy, and we're basically just hanging out. If we hang out here long enough though, we know from experience that more than likely what's going to happen is we're eating through a bunch of sell orders, and then eventually it's just going to burst to the upside. It also corresponds with, depending on how you draw it in here, this is our resistance line right here. You're the wrong color. Fix it. That's our high. That's another high right here, clearly lower. And then, we can see some clear resistance right here. And then when we couldn't break above it day after day after day, we got a capitulation candle come in. And then we came back up to it, couldn't get above it. And now we just kind of cruise sideways outside of it. So if we hang out here long enough, we would expect to get some sort of, measured move back up here, some sort of explosive move to the upside. Which I think would take us probably up to a key fib level. So 34 cents, 35 cents, maybe the 618, 40 cents, maybe 53 cents if we get up to the 786. I don't know that we're going to get up that high again. I almost just feel like people have given up on Dogecoin, but we'll have to wait and see. It's not dead yet, but let's just say it's not looking great for the old Shiba Inu crypto. Or wait, no, it's a whole different crypto now. I can't even use that joke because it's a different crypto. Ethereum or Ethereum, looking a little stronger. We have that resistance. Only really 2 touch points, but when we got back up to it again, we broke above it. We're above the 8 and 21 right now, looking across them to the upside. Got the hard buy signal. Bunch of green histograms on the daily. We are crossing the slope line right now. Looks like we're going to get continuation to the upside. Let's go ahead and throw a little Fibonacci up on the chart. A little Fibonacci. There we go. Make that a little brighter for you folks at home. Whoop. That'll work. I would think the 382 and these key moving averages at 2400, 0.5 would be next. It's going to be tough to get above that, but if we do, that's all our moving averages below us. 2700, 618. A lot of like resistance through here, but maybe we tag that. 3000. Maybe we get up to 786, 3500. It's going to be rough though. It's all dependent on the corn. All dependent on Bitcoin. And then if we just look at our moving averages here on longer time frames, we're trying to save this 821 cross. Much more bullish than Bitcoin. Bitcoin has already gotten that on the weekly. We do have a bunch of our red dots from the parabolic SAR though. Sell by sell signal, all red here. We would expect a bounce as the slope line intersects with the histograms. Even though they're all red, we expect normally some kind of strength off that as we try to save that cross from taking place. If we do break down below it, which could go either way at this point in time, I would expect a rejection off the 8 right here, and then an immediate move down to like $1,500, and then the 821 cross. And it would look a lot more like most other cryptos do. At which point in time, it might start looking like a left shoulder here, a neckline, a head, a neckline, a right shoulder push back up here, and then a sell off, maybe. Or maybe it flips Bitcoin, and I'm wrong about everything, and Ethereum's the best. You're the best. Hard sell signal on the monthly. Eek. Hard to argue with that. We remember when we got that hard buy signal back here. That was back when Ethereum was like $200. So doesn't look great. If we get down to that 21, that's like $1,200, $1,250. Let's just hope. Let's hope that we're not going down, because it's going to be a lot of value lost. BNB. With BNB. Old Binance coin. It's above the 200. Exponential and simple. That's good. Above the 8. trying to get up to the 21 there, maybe. I don't know. Breaking through that descending resistance. There's a bunch of different ways you could draw it, but I mean, you got to argue you're through it now. Hard buy signal, a bunch of red histograms. We're above it. Is BNB going back up? Looks good. Looks good. There's potential. Again, this is one of the more bullish ones. Have not gotten the 821 cross. Trying to save it. We need some bulls to show up, though, and they are nowhere to be found. They are hiding in their mom's basements, crying in their pillows because they forgot to take profits. That's speculative, though. I don't really know that. I'm not sure. Could be their dad's basements. ADA, Cardano. Found support at that key level. You know, that white support right here. Getting the hard buy signal. A bunch of green histograms. Still below the slope line. Trying to flip the 821. Well above the 200 exponential and simple moving averages. Breaking through that resistance line. Every single one of these charts looks the same. The only difference is, if you buy this asset, you get Charles Hoskinson too. Yay. Yay. We're bullish on Cardano because Gogan. All red histograms on the weekly. Trying to save the 821 cross. If we lose this level, I mean, man, there's not even a ton of like good support here. Let's just say we really want this to hold. Because if not, yeah, it's going to be rough. It's going to be rough. But Charles will literally come to your house and tuck you in at night. Because he probably has been selling this whole time. XRP. Ugh. More like XR poop, am I right? On the daily, hard buy signal. Bunch of green histograms. Didn't even put in a new all-time high this whole bull run while everybody else got rich. XRP guys just said, when's going to be my time, boss? When am I going to get a turn with my XRPs? Thought it was going to dethrone the Swift King. Trying to break out through here. Getting a little push up. This one, okay, so now you'll see these assets are getting progressively worse. Now we're below the 200 exponential and simple moving average. Okay? Did not make a new all-time high. So while it looks decent on the daily, it's not good. We're about to get the cross, 821 cross right here. We're hanging out at the 0.5 from our previous all-time high. And that 4-year cycle based on Bitcoin, that previous all-time high was all the way up here. We didn't even get above the 786. And then we got rejected, came down exactly to the 0.5, bounced up, got rejected at the 618, came back down to the 0.5. So we bounce up here again, put in another lower high, try to retest the 821 cross at like 82 cents. After we get to 82 cents, we roll back over and go down to the 382, maybe. 41 cents after that for XRP. And then hard sell, bunch of red histograms, below the slope line. Let's just say I wouldn't want to be an all-in on XRP guy. I would not want to be in the XRP cult and watch everybody else do well in this bull run. And then you're just sitting there with your XR penises in your hand, hoping you get some monies. Uniswap. Again, you'll notice these are getting progressively worse as we go through. At least these next few. Clear resistance here. Broke down from it when we couldn't get above it. Finally broke above it. Tried to break down from it again. Found support. I would consider that a confirmed breakout. Still well below 200 exponential and simple moving averages. About to get a death cross on the daily. Hard buy signal. Multiple green histograms. It looks like we're going to get a push up here. Maybe like $23, $24. Lot of overhead resistance. Look at all this overhead resistance. You know, that's like basically this whole entire year of price action just going sideways to down. A lot of sellers, guys. A lot of sellers. It's going to be tough to get back above it. The weekly is already crossed to the downside at 821. So again, you'll see we're getting progressively worse. All red histograms, powerfully sloped to the downside. Short term, we could see some continuation, but it does not look good right now. Polkadot, so same thing. We are well below the key resistance / support line here. We have lost it. We're coming back up. This one looks like Dogecoin. It's still below that key resistance, trying to get above it. If it gets above it, though, you know, this one hasn't even broken out of our little slope line right here too. So we still come up, and that's a double resistance. So that's going to be extremely hard to get above $18. If we do, though, you know, we got the moving averages. About to get a death cross on the daily. 23, 25. Bunch of green histograms on the daily. About to get the hard buy signal. Switching over to the weekly though, this one has already crossed 821 to the downside. Tried to come up and save the cross, which is what some of the more bullish ones like XRP I would expect to happen. But when we get rejected, sell back off to a lower low, which is what we don't want to see. We were talking about that with quite a few assets. And then after that, you get another one of these, a giant red dildo in your face. No, that's like a meme candle right there. We do not want to see that happen. All red histograms, bearish control zone on the weekly. Not good, guys. Not good. Link, stinky linky. You know, it's weak, way below the 200 exponential and simple. They're rolled over to the downside, getting the death cross. It's broken out of our descending resistance right here. Couple green histograms, hard buy signal. It's going to be tough. Going to be tough. Already got the 821 cross. The exact same thing. Bounced up, tried to get above it, got rejected, selling off to a new low. Same thing. Wherever we find support, I would expect to come back up, try to get above it. If we get rejected, new low. Does not look good. Does not look good. All right, and then these are not specifically in order based on good or badness. These are just ones that were requested. So they're not getting progressively worse from here. And if they did, the very last one. Well, I can't even say that. There's a bunch of ones that went to zero. So Matic, you know, we've got a pretty clear resistance right here. Still below it, trying to push up to it. Don't have enough. I'd pull up Coinbase. I'm sure there's one with a longer time frame, but you know, trying to push up here. Doesn't look great. Couple green histograms in a row. Looks like we're about to get the cross. If we can get above a $1.27, I think the next key resistance is going to be around like a $1.50. And then we just got to pay attention to the previous highs. $1.63. This is going to be a tough area to get above in there. $1.87. And then after that, $2.21. We could do a fib retracement, internal retracement from the top right here. And then we're paying attention to the bottom right here. So we have from the top to the bottom. The first initial bounce was all the way back to the 886. It got rejected. Came down to the 236 perfectly. Found support at the 236. First it found support at the 382. So this is acting, it's acting like very strong off of our Fibonacci levels, which is good. It's trading extremely technically, which means bots and algos and market makers are looking at the same thing we're looking at. So what do we expect? If we bounce the 382, get rejected at the 618, we would expect then we bounce the 236, and then we potentially get rejected at the 0.5 if we're just putting in lower highs. So there's definitely potential for like $1.45 or something like that. You know, if we get this little break up out of here, you could argue that we have a giant descending triangle taking place, which I would not argue against. In the event that we get a break to the upside here, if it does get up here, you know, we could basically come up and potentially retest all-time highs. If we get a break to the downside, could be rough, guys. Could be rough. Bunch of green histograms on the daily. Looking like it's about to get the cross. Let's switch over and check out the weekly. Pull up our moving averages again. Get rid of our drawing tools. Oh, yeah. See, I don't have enough history on this chart. I should have pulled up a different one. I mean, we're below the 8 right here. Not good. We basically bounced up, got rejected off the 8, selling off. I'll pull up a different chart for next time with a little more history on it. I know this, I don't know when this got listed on Coinbase, but not long ago. In March. Acropolis. It's below the 377 and the 528. The 200s are way up here. It already got the death cross. It's putting in lower lows. It's putting in a little bit of bullish divergence, which is good. Some green histograms in a row. It's flipping over slope line, about to get the hard buy. But what's going to happen is it's just going to come up here and just bump its head on this resistance and get rejected from like 2 cents. Maybe. I mean, it's at what? 1.7 pennies right now. So 2 cents, that's like a 20% move. I mean, it's not bad, but it's going to be tough for some of these like smaller market cap, like shit coins to gain traction. Because what happens is in a bull market, everybody spreads out and gets riskier and riskier and looks for like cheaper stuff with potentially higher yields. because Bitcoin's getting too expensive and it's moving in less percentages. And, you know, market cap is like massive, so it takes a lot more money coming in to move. And then as we start entering into like a sideways consolidation or a bear market, money starts coming out of the shit coins and coming back into like the first movers, the stronger coins, like the staples. And that's what I think we're going to see happen. And a lot of these shit coins going to be tough for them to gain momentum back to the upside. So it is putting in, you know, low, higher low, potentially higher low. It is bouncing the 89 right here. We just got to see, does it gain any actual strength? Because again, you know, we have basically a slightly lower low on the weekly. We're in the bearish control zone. We got the hard sell back here. Should have been out at like 5.5 cents. Bunch of red histograms in a row. Red slope line. I mean, the 821 have clearly crossed like powerfully to the downside back here. And the initial bounce, we saw most of them come all the way back up to 821, which would have been at like 3.7 cents. This had no strength. It bounced barely at all, which shows you that people are just completely losing hope in this thing. The last time this happened, you know, it bounced up, couldn't get above the 21. This time, you know, it didn't even get to the 21. So you could argue that around 2.5 to 3 cents is going to be really hard to get above. Really hard to get above. But you'll notice here on the weekly, it found support at the 50 and 55 moving averages. Here it broke down below them and found support at the 89 moving averages. And if it breaks down again, we don't even have any other moving averages populated. I don't know. There might be something with longer history. I feel like KuCoin is probably one of the exchanges with longest history. But in the future, I can look into these a little bit more. I basically just threw them up on the chart for the group. And I can look at a different exchange and post like a static chart if anybody's interested. Oh, wait, did I skip one there? No, that was Acropolis. Actual KuCoin token on KuCoin Exchange. Little baby BNB. Little mini Binance coin. Got my exchange. Got my coin on my exchange. Topped out back here. Resistance. Kind of poked out the top of the resistance, but I think you could argue that this was a pretty decent little touch here. So looks like it's getting ready to break out. This one's stronger than a lot of the ones we've looked at more recently, as it is well above its 200s. Well, not well above them, but it is above them. Hard buy signal above the slope line. Couple green histograms in a row. Looks like it's about to break back to the upside here. If it does, I would expect it to touch one of these. Who drew this? Did I chart this before? I guess I charted this before. Probably for the same person. Yeah, so it basically came all the way up and almost got to its all-time high from 2018, but failed. So this one is somewhere in between XRP and actual good coins. When it sold off, you know, it's trading pretty technically though, honestly. When it was on its way up, it topped at the 0.5 and then found support at the 618 and then came up, you know, basically topped at like essentially a double top and then came down to the 786, got rejected at the 886, sold off to the 618, got rejected at the 786. So it looks like it's basically just like a bouncy ball, or what were those old things called back in the day? Slinky. It looks like a slinky. KuCoin is the slinky of cryptos. It's like, oh, down a step, and then the back flips over top of it, and down a step, and the back flips over top of it, and then it's probably going to go down to $2.60, which is, it's at $7.36 right now. So just make sure that whatever your target to the upside is the equivalence of losing 66% of your value if it sells off, because that's the next target to the downside. So as long as it goes up higher than, what would be a 66% move? As long as it gets higher than $12.96. So as long as it goes up to $13, you're basically at roughly like a 1-to-1 ratio, which is not an appropriate trade in my opinion, as you want it to be at least a 2-to-1 ratio, risk reward. So in my opinion, it's not a good place to be entering, and there's more likely going to be prolonged downside than upside based on the slinky theory, which has been proven and tested based on this chart and our high of April 2021. So if slinky theory is correct, KuCoin is not looking great. Hard buy signal though, some green histograms. It's bouncing off the slope line. There's some potential here for some more upside, but you know, honestly, I would be looking at it as exit point, because you got to figure all the people that held, all the bag holders, all the people that are just carrying suitcases, carried them for years and years and years and years and years, and finally got back up. And if they didn't give back their suitcases, they're like, oh God, not again. Oh, no, not this again. Oh, dear Lord. So, I mean, you know, not good. I would not want to be stuck in this thing for another 3 years. But what do I know? I believe in slinky theory. So FTM, the old Phantom Menace. Um, Putting in a little bullish divergence, bunch of green histograms, passed over the slope line. It's kind of just going sideways here, doing nothing. It is very technically, excuse me, very technically bouncing its moving averages. Man, this should be an indicator that you could get for free somewhere. Somebody should make this into an indicator and give it away for free. It's bouncing the 200 exponential perfectly. It's bouncing the 200 simple perfectly. It's bouncing the 377 perfectly. It's bouncing the 528 perfectly. So this thing is trading pretty technically as well. Phantom is definitely below its 200s. I mean, it's weak. It's got the 821 crosshair to the downside. It got rejected on the 21 last time. Maybe it comes back up here. Tries to save it again at like 320. I mean, it's at $2 $2. Gee wish. It's at 24 cents right now. So if it bounces back up, and gets rejected, at 32 cents? I mean, that's a nice move. From 24 cents to 32 cents. What is that? Like 33% move, I think? 8 pennies? 8 pennies per phantom coin. It's in the bearish control zone. Bunch of red histograms in a row. Well below the slope line. I mean, I don't know. There might be something with longer history on this. But overall, still below 200 exponential and simple. And it's barely hanging on to the 377. This does not look good. I mean, again, it could still come back up here, get another pushback to the upside, but I think it's going to have a real tough time getting above like 27, 28 cents. There's a lot of resistance turn or support turn resistance here. A lot of chop through this whole area. A lot of these smaller alts are just not looking too promising, honestly. CTI, Clintex. The old Clintoris. I mean, clear resistance, kind of just trading sideways through it, just populating the 200 exponential and simple moving average, kind of dabbling, touching tips, bouncing off of it. Looks like it's going to get a break to the upside, honestly. Starting to lose the strength here, though. We've got a red histogram on the daily towards the top of the range. I think this bounces. I think it maybe sells off a little bit and then strengthens to the upside. I think it gets one of these big boy wicks where it gets a little powerful move all of a sudden and then just gets sold into powerfully. I have a feeling that's probably what will happen here. Where does that take it to? I mean, there's a lot of ways you could see. We could use a Fibonacci. You could use some kind of like a second kind of like resistance type situation. If this thing gets a big push up, I would be trying to get out of it at like 9 or 10 cents probably. Let's put a fib up here. Let's use some technicals and not slinky theory on this one. Slinky theory is real, man. There's a book about it. And if there isn't, I'll write one. I wonder how much a slinky's going for. I know collectors, they probably remade the slinky, though. Back in the day, though, they were metal. I'm sure they're just like plastic now. Cheap junk slinkies. So let's see. From the top here to the bottom here, we got our, initial bounce off the bottom. Took us back up to the 236. So now here we are hanging out at the 236. So, and that corresponds. This thing's trading very technically as well. It found support here at the 382 before it knew it was the 382, which was clearly resistance here, support through here. So I think the next target is probably like 10.6 cents. And it's consolidating at that moving average, at that cluster of moving averages. So I think it bursts up to 10.4 cents. And if it doesn't get one of these wicks like that, I think it continues up and maybe like 13.4 cents, and then it gets the wick. It could get as high as 17 cents. I wouldn't want to be in this thing. Like, I would be trying to get out of this, honestly, in my opinion. But obviously, it's not like financial advice or anything. Take your profits, buy a slinky. Cake. I do love me some cake. I'm not talking about the Not talking about the kind you put in the oven, if you know what I'm saying. Oh, sorry. I forgot. We have a girl now. I got to tone it down. There was a girl in the chat one live stream ago. It's not just the bros anymore, bros. So, but statistically, it's just the bros. It's like 99.9% bros and one girl ever. So, if you're here now, say something and I'll make sure to keep it PG-ish. Anyway, about that cake. I mean, bouncing 200 exponential and simple right here above the 8. It looks like it's trying to break out here. Same type of deal. You know, we got a pretty clear like resistance area here. I would say we're pretty much breaking out of it, have broken out of it, close to breaking out of it. We're basically just trading sideways through it. Let's turn it to red. I think it shows up a little better for you guys at home. Looks like we're about to push up here. You know, if we can get above just this little cluster right here, which is, you know, again, it's sort of like the Dogecoin where we have like that flat support broke down from it, and that's our resistance, corresponds with the 200 moving averages. I think this pushes up to like 18. Are we in dollars again? Oh, we're back to dollars. We're not doing pennies? Okay. I think it pushes back up to $18, which is a nice move. You know, that's like, again, like 30% move roughly, maybe a little less. Couple green histograms, buy signal. Doesn't look terrible. If we cross this 821 back to the upside, it'll look good. We can throw another Fibonacci on here. I'm sure at this point in time, you guys have figured out that I literally just do the same thing over and over again, because if it ain't broke, don't fix it. Trading, again, very technically. Gotta love these things. It's almost like there's some bots and market makers doing the same thing we're doing. From the top to the bottom, bounce immediately back to the 0.5, 50% retracement of the bearish dump, at which point in time it retested the lows here, came back up and is getting rejected at the 236. If we consolidate here long enough, I would expect us to retest the 382 at $17.53. And then if we get above that, I would expect us to come back up once again to $21.06. And then if we get above that, which that's going to be a tough resistance because we have this support right here, resistance, resistance. But if we break above that, which probably corresponds somewhat with our measured move, I would expect us to hit 25, say it in the chat, and 39 cents. There is a delay though, so I don't expect you guys to say it like real time. But you know what to say, or put a sign / emoji in the chat for me. Yeah, there's definitely some tough resistance though here. It's going to be, I mean, if it breaks above 21 bucks, I think we're up at 25, 26. At which point in time, again, there's going to be a lot of resistance. So we have to play it by ear. But overall, let's see. This one has a decent amount of history. Oh, maybe not. That's a little bit. It's got the 821 about to cross the downside. So I think it does try to push back up here. It tried to get above the 8 and got rejected. Retested the low. I think it pushes up here to like 16.55 at least. But bearish control zone, bunch of red histograms. I mean, does not look great, my dudes. Hard buy signal though, a couple green histograms. I think almost every crypto is showing some life short term, but I'm not seeing anything in the charts telling me that all of a sudden crypto is just going to go to new all-time highs. Not even Slinky Theory tells us that. Bitcoin dominance, the BDCD. You know, this is doing what we would expect. We're getting the hard buy signal. It always starts to pump a little bit and then sells back off most of the move and then finds support at a higher low. It's done it every time. You know, bounces, sells back off. Bounces, sells back off, higher low, moves up, dumps. Bounces, you know, sells back off, higher low, moves up. Same thing. Bounces, higher low, moves up. Bounces, higher low, moves up. So what we would expect to happen here, guys? Bounces, higher low, sell back off a little bit more. We see a little money come into those altcoins. Maybe it gets back down to like 44 or so. And then I would expect it to test that 21. All green histograms, hard buy signal on the weekly, coming out of the bearish control zone. Bitcoin dominance going to 50%. I mean, I would bet my corns on it. I would bet my altcoins. 51 is the red, is the 8 on the monthly. In the bearish control zone. Trying to bounce this level here. I don't know, man. Maybe we do get a new all-time high out of Bitcoin. And like this cycle. I would love it. I would love one more chance for the money grab before the collapse. We'll have to see though. There's definitely time cycle analysis tells us that there's a possibility we still see all-time highs this bull run, and we got maybe a slow third quarter sideways action. Altcoins sell off, Bitcoin dominance pumps up, and then by the end of the year, altcoins explode to the upside, Bitcoin explodes to the upside, new all-time highs. Michael failure turns back into Michael failure. We'll see. Total market cap, divergence signal, sell by sell, bunch of red histograms, lost the slope line. It is still blue. We tried to come up here and save the 821 cross. It looks like we're getting rejected now. Parabolic SAR is going to the downside. We're basically down at the pivot level at the 50-55 exponential moving average. We're about to lose another $429 billion if we go to the downside. This looks bad on the weekly. There's nothing good here. Nothing to see here. Move along. We're hanging on to the 8 on the monthly. Getting the hard sell signal. Not good, guys. We did get the hard sell signal previously, but did not exit the bullish control zone. We have exited the bullish control zone here, though, and we got the hard sell signal. So these signals are slightly different, as the hard sell signal and exiting the bullish control zone, to me, is the sell signal. So if we get a hard sell, but we don't exit the bullish control zone, I wait for the hard signal till the exit. So that's basically the exact top here. So is this the top here as well? Probably. And then if you look at the buy right here on total market cap, I mean, we were getting the buy on crypto cap at 243 billion, and then it ran up to 2.4 trillion. So it 10x from the buy. And then from when we got the sell, confirmed to the bottom, how much did we lose in value? We lost 440 billion, or 82%. So me personally, I would rather not risk an 82% drawdown. I do not want to see crypto back at $400 billion. God, that's terrible. But it looks like it on the monthly. It looks terrible. Crypto cap. So according to everything but time cycle analysis, we're fooked. We are fooked. Okay. That's it for the cryptos. I think I got them all. If I missed it, just hit me up in Discord, and I will chart out whatever I missed for you. I'm going to jump over in the chat here again and say what's up. Pulled out of FTM. I do not blame you, man. Hopefully you pulled and you prayed as well, as they're much more effective in tandem, although either one works until it doesn't. Damn, crypto, you nasty. Yeah, crypto is going to need its entire quarter to fix itself. It needs 3 months locked at home by itself, and it needs like a stern talking to, and maybe just honestly, I think it just needs to find itself. Crypto is lost right now. And hopefully a little time and a little sideways action, not as much down, more sideways, and we can still put in another all-time high, but it does not look great. Had empty NOS on the FTM. Yeah, man. Too soon, Junior. Always carry 2 bottles of the old NOS. Okay. Yeah, but the NOS is all good until it blows up, like the old Eclipse. But then again, it's for the better, because the Eclipse explodes and then you get a Supra. I would much rather have a Supra than an Eclipse. So, much better. Same with all this Lambo talk. Everybody wants a Lambo. I'm like, keep your Lambo, bro. I'll take a Rari. I want that Rari. I want to get that Rari. Let's see. So that's it for crypto. Coinbase still looking decent. We're halfway to our measure move. This trade is playing out quite nicely. Once again, I don't want to tell you guys don't try to pick bottoms, and then I pick bottoms all the time. But when something sells off 50% like that from its direct listing or IPO or whatever, it works out pretty well. It really does. I don't know what the statistics are, but from 33 to 66%, like from its like IPO or from its little top or whatever, you can almost always get like a nice bounce off of it. So, you know, if you say somewhere around 400 and then you buy somewhere around 200, you know, that's basically 50% down from the IPO, and it lined up perfectly with our Fibonacci extensions. Looks good so far. I expect continuation to 274 on Coinbase, potentially our measured move of 284, 0.5 at 300, or our next potential target. I don't know why that's at 3. I feel like that should be at the Fibonacci levels. I don't know. And then maybe like 324. It's gonna be tough though. There's a lot of overhead resistance on this bad boy, and like you could argue right now that we're just filling this gap right here, and that it's just gonna dump. I mean, or that we filled the gap, because we basically did. We had a gap right here. We gapped down, couldn't get back up to fill it. We filled most of it, couldn't get back up to fill it, and then we just capitulated. So you could argue this is just a gap fill and it's gonna roll over. We did cross the 821 to the upside. The knife is super high up here. Stochs are still angled powerfully to the upside. Bunch of green histograms. We crossed over the 0 line, so it looks decent for continuation. Came back down here, retested the 236. You know, and that's a key resistance right here. You know, I may actually add to this position. I may add to this. What would the risk reward be from here for continuation? Let's look. According to Slinky Theory, I mean, you could still get a pretty easy 2-to-1 on this. You know, with like an 8% stop loss, assuming it breaks down from the 821 and starts closing back below it, and this is like looking like a big rejection basically, or a failed cross. Well, I mean a cross, but you know, fails to maintain it. Just a move up to the 0.5 is going to give us 17.5% with an 8% stop loss. So it's like 2-to-1. Now what if it underperforms? Let's look at that, because I would almost rather see it pull back a little more, because that's going to kill the risk reward. I mean, it's still 1-to-1. So I think best case scenario, you get at least a 2-to-1. Worst case scenario, it's a 1-to-1, you know, coin toss, a coin toss on the old Coinbase. Yeah, again, I may add to this one. Nothing crazy though. There's a lot of other stuff that looks a lot better. So yeah, that's Coinbase. Riot. You know, Riot has basically broken out of this channel. Got the 821 cross. Looking decent here. Trade is looking decent here. Got rejected exactly at the 0.5. This thing is trading very technically as well. It was basing off the 0.5, broke down from it, got the measure move perfectly, and then we put into place our actual fib to where we could identify, obviously, that as the 0.5. We've come back up here now. You know, basically came back up, got slightly above the 382, couldn't hold it, touched the 236 perfectly, got continuation. Now we have like higher lows, obviously. I mean, you could draw this a couple ways, but I kind of like it like that. Like it like this and like that and like this. And, you know, a little poke out the bottom, little fake out, little fakey breaky, little rejection at the top of the range. Finds a little continuation. Gets a little push up here to the upside. The old pusher-rooney. Got a little bit of a push on up. See if we get that measure move from the breakout. You could argue the breakout was back here. We'll go from where it actually like broke out and confirmed though. I think we still get this. I mean, it's 35% from the entry. So we're already third of the way there. I think we get up to the 618. We'll see though. There's a lot of resistance overhead here. It's going to be tough to get through this right here. It's going to be tough to get through that. If we do get through it though, 618 should happen. I think it'll probably be an underperforming measure move though. I think this is, if you're in this trade, you stay in this trade, but I don't see any reason to, I don't see too much potential for a late entry unless it comes back down. So, but this is not financial advice, obviously. We do have blue slope line. We are about to get that 821 across, a little higher up in the range than I like to see, but we'll see. MicroStrategy. MicroStrategy, halfway to the measure move. Got the break of the channel. I'm going to turn off these moving averages. Again, above all the moving averages, doesn't look bad. Trading pretty technically off the 0 line. Bounced to 236. Got above the 382, finding support. Next target. Again, it's going to be tough to get above here. This is like our macro fib, and that's like basically where we topped out. That's also like the support through this range and resistance, and then we topped out there again. I think we probably get a push up here, depending though. I think there's enough Michael Saylor cultists that we at least get a push up to like 791. And when I say we, I mean everyone else but me, because I have no interest in anything Michael Saylor's involved in, with the exception of Bitcoin. And I was here first. Well, before he was. Got the hard sell. Found support after the breakout. Couple green histograms. It looks decent until you turn on the weekly, and then is when it starts getting a little sketch. 821, it's crossing back to the upside. I mean, it's getting the buy signal now. So still well below the slope line, but it flipped it back over blue. I mean, maybe it takes back off. Maybe it takes back off. This is one rocket ship I will not be mad that I'm not on, though. You guys can wave from the moon, because I am not coming on this one. Okay, speaking of meme stocks, let's go to our other meme stocks. GameStonk, GME, lost 821, crossed the downside. You know, it wasn't a violent sell-off. It was basically just a sideways consolidation. You could argue it's like a little triangle pattern playing out. We're in the bearish control zone, about to potentially get the Stokes cross back to the upside. A bunch of red histograms in a row. So I think sideways probably for a little bit, but if we get this cross back up, maybe we just pump and get another, what did we get? A high, a low, something in the middle, and then a slightly higher than this one, but lower than that one. So we'll see. I don't know. This could get ugly though. I mean, the last time it got that cross though, it did see a little follow through. Did see a little bit of follow through last time. I don't know. I'm not sure how strong the old game stonkers are, but 700% last time. So a 700% upside potential. Oh, it's going to be tough. It's going to be tough to chart the old 700% to the upside, but gosh, I mean, you could argue there's a trade setup in there somewhere on the old GameStonk. I don't love it, but it is what it is. But again, you got a high, a lower high, another lower high. We already hit the measure move of like our little descending resistance here. And it had some serious bearish divergence from those 2 points, and then it did not sell off that much. Got the hard buy back here and basically just went sideways. All red histograms. I mean, it's hanging on right now. There's some diamond hands going on right now. Monthly hard sell signal. All green histograms still, though. That looks like a pretty big rejection. That is not the type of candle I want if I'm a diamond hands holder. That is not what I want to see. If this was at the bottom of range and flipped upside down in green, I would be excited. So I would not be excited if I was long on this right now. But who knows? I mean, it could, look, it sells off to 32 bucks. Who cares? It's still up 10x from the lows. I mean, it's not like the company's like fundamentally useless and would otherwise be bankrupt. Yeah, I don't know. We're going to put those diamond hands to the test here real soon on some of these meme stocks. Real soon. AMC, how are the monkeys doing? How are the gorilla boys? The old apes. I mean, it's holding at the top of the range, hard sell signal, bunch of red histograms in a row, hanging on to the 8 moving average. Looks like it wants to break down to 51 bucks. After that, maybe find some support at 42. I think realistically it's going to test $36 real soon. I mean, these guys got to get dehydrated. You cannot just drink each other's urine. It does not work, gentlemen. It does not work. All you got to do is look at any video that talks about AMC positively on the internet, read the comments section, and you'll literally be like, wow, these people will all lose their money. Guaranteed. I mean, if it comes back down to the 200 moving average, it's only $13. So they could, I mean, maybe lose 75%, but they're still up. As long as you didn't buy anywhere along the way up here, you're good, I think. Yeah. I mean, movie theaters are great. There's a lot of fundamentals that are strong for movie theaters. If they start letting you drink alcohol, smoke marijuana, and Netflix and chill inside the movie theater, I could totally see AMC making a comeback. Maybe even drive-in movie theaters if we get a resurgence of the Delta strain. They could do well then if they knock down all the walls and everybody just pulls up in their cars, parks in the parking lot. Maybe they get a projector and project movies on the side of the building and everybody just parks outside and gets fucked up and has orgies. Maybe then. But that's about it, man. I don't think they could bust into the streaming services. They'd be fighting basically Netflix, who hasn't, their chart doesn't look great, or like Disney, or I don't know. I would love to hear a strong argument for why AMC is good and you would want to buy it. Change my mind. Change my mind about AMC. And you can't use the words apes, diamond hands, or bro. And if you can change my mind, I will buy some AMC and I will ape it up with you. But you're not allowed to use the words diamond hands. You're not allowed to say apes, and you can't say bro. But other than that, everything's free game. And definitely you cannot just say, come on, bro, diamond hands, we're apes. That will not sell me on AMC. It will not sell me on AMC. Maybe, I don't know. If you say it like that in a convincing manner and kind of shrug your shoulders, I might buy some. But no. Bed Bath & Beyond. Oh, look, we got another parabolic candle here today with a massive rejection. But, I mean, hey, 28% in a day, that's pretty good. But only 7 of it was sticky. These meme stocks, guys. That was all in a hard buy signal. So one could argue this thing could see continuation. Basically made it back up. Now look, this triangle is so ugly, but it's really the technical way to draw it. Because you go from the high to the low, which is right here. So it actually doesn't technically work if you do it right there. That's technically not right. But you could, the alternative way to do it, which, I mean, obviously somebody else is drawing it like that too, because you can see it found support perfectly off those points. But you could draw it the other way too, and it would look, you know, if you did something like, and then you get a descending triangle, you know, and then you could argue that it's going to put in another point down here. So we can switch this one to, what do we want to switch, the background color? This would be the red one. Oops, I did the wrong one. Damn it, I did everything but the frickin' one. Alright, so there's our bearish pattern, which would be a descending triangle, and how it could play out. And then this one would be, we want the one that looks like a little paint thing pouring over. That makes sense. That would be our bullish one right there. So you can kind of see like the two different ways you would look at this and how important it is to draw this the correct way, or draw it both ways and then see which one plays out. Because realistically, if you're drawing it as this big symmetrical triangle and then it like comes back up to the top and then breaks down from it, you say, oh, it broke out of the triangle, it's going to get a massive move to the downside. And then in all actuality, you were just wrong. This triangle got invalidated, and then it was actually this the whole time, but you just didn't know it yet because it hadn't broken down. So that's probably the route I would go. I think that's more likely to happen than not. I will leave this in place here, but I think because of the distance between this point and this point and then this point, like you have a real long distance there and then a short distance to the top and then a really short distance back to the bottom. I think it would be more realistic that you have a long distance to the bottom, a medium distance to the top, and then again like more of a like, you know, medium or even like a short distance to the bottom here. But you know, I would picture it something a little more like that. But again, either one of these situations could play out. One is obviously, you know, fairly bullish and a continuation pattern. Like it's neutral, but typically would break to the upside. That's the green one. And then the other is obviously bearish, which is a distribution pattern or descending triangle. And then you would probably get your breakdown from here. And then Bed Bath & Beyond would go to, I think, negative $4 if I'm looking at this right. But previously got a little continuation here, rejection. Let's look at it on longer time frame. Looks good. Bed Bath & Beyond looks good. Went full on parabolic and didn't even get a new high. It's strong. I think this gap right here could be trouble though at $15. It's only 50% down from here. For a meme stock, that's nothing. It's nothing for diamond hands. We're about to get the cross on the Stokes to the downside. Bunch of green histograms though, blue slope. Monthly looks bad. Real bad. Weekly looks mediocre at best. Getting the buy signal below the slope line. Man, I don't even, why am I even charting these? Why do I chart meme stocks? They're a meme. You can, it's one or the other. You can either use technical analysis or you can be a meme stock. You can't have both. Can't have both. All right, I'm going to jump over in the comments real quick and then keep rolling with our tech. Taking the Supra any day. You would rather have a Supra than an Eclipse? Are you crazy? I got to agree, man. Love them Supras. What's the retail value on one of those? More than you can afford, pal. Man, I wonder what a Supra is going for these days. I mean, I know they got like the new ones or whatever, but I wonder what the old Supras are going for. Like, I feel like before we went into like a parabolic bubble, in like all assets, they were at like, you know, 30 to 50,000 or something like that. So they're probably over $1 million now. Or maybe they're not worth anything. Maybe they're worth $8,000 because everybody just bought freaking Lambos. Are they? Yeah, I mean, they got to be getting rare at this point in time, and they're definitely collectors. And I feel like everybody that's like involved in like crypto and stonks and everything like is from like that generation where like the crypto is sort of like the unicorn. 2JZ, no shit. Tesla. I mean, we got the breakout. We hit our next target. We're outside of the range, but we're just putting in another lower high. Do we get continuation? Maybe. Do we come back down and get the retest and it lines up perfectly with the breakout resistance, also our support, and the 382? I mean, I think there's a good chance we come down here, reload, and get continuation. We'll have to see though. Doesn't look particularly great here. I have a feeling rates are really going to screw with all these. Look, tech went sideways for a long time. Everything else went up while it went sideways. Now tech's getting the dead cat bounce to like a lower high on almost everything, but somehow the NASDAQ is making new all-time highs. That's a divergence between the index and the actual like strong stocks in the index. As like just about everything in the index is not making all-time highs, and in like especially important things like Apple and Tesla and stuff like that. Now granted, you have some stocks that are making all-time highs that are important too. I'm not saying you don't, but the majority of them are not, including all the big names. Pinterest here, you know, at extremely high levels. I think we're topping out again. We're looking for another one of these candles. I would absolutely love to see another big fat rejection candle as it tries to break out here, gets rejected at our level. This trade is almost done with. I'm tempted to just say F it, but I could totally see, you know, milking this thing for another like few percent off the top here. But I mean, that's a nice little, I think we're up like 25% right now. That's nice. Very nice. I like you. I like money. eBay is busting out here. Man, honestly, I would have rather see this hold right here, and I would be in a nice trade on eBay, but I did not take this position. I'll wait for something else or a retest. When I see a breakout like that that's so technical, I want to see it hold. I didn't like that price action, and I could have took the opportunity basically to re-enter here. There was enough meat on the bone too that we could take. You could argue there was enough meat on the bone once we took out the $67 level to take it, but at that point in time, there's just I just go for the easy stuff, guys. I'm not on a breakout, especially the risk reward is not going to be there in the same way. I'd rather just take the easy trades, getting the hard buy at the top of the range. You know, invalidating divergence. So that's good if it continues up here. If it sells off right now, it's going to look like bearish divergence though. PayPal, higher low on the micro here, but lower high so far on the macro. We'll see. It is bumping its head on the little channel that was operating here. The measure move should take us up to basically that old all-time high retest. Does a double top there? Maybe. We got sell buy, sell buy. You know, we're very close to getting another sell. But we're still well up in the bullish control zone. 2 red histograms in a row, though. This thing looks like it might be topping out. It's also technical level at the 886 and at the breakdown of support turn resistance. There's a lot of stuff here that looks like tech was a nice little trade, a quick little swing, some easy money, and it might be Denny. That money might be Denny. Bumble is stalling out here. If it hangs out at this level long enough, I'll stay in the trade for a potential burst to the upside. But if it doesn't hold this area right here, I'll probably end up just jumping out of this right here. I mean, our trade played out. It's like 40 something percent and holding. Buzz buzz. Buzz buzz Bumble. This thing's trading pretty technical too. I mean, this is a key support at the 0.5. Support turn resistance. The breakdown was the perfect measure move. I mean, what are we holding on here for, guys? $62? How much more is that? Like, let's be real here. Are we being greedy or do we close this out? Another 9.5%? Are we being greedy right here? Or do we close it? $25. We go to the 786. 8 if we drop back down to the 382. I think I'll just wait and see what it does. I'll give up 8% if I have to, and then if that doesn't hold, get out. I don't know. We'll see. We'll see how the price action looks. We're at elevated levels. It looks like it wants to sell off. Buzz buzz. A lot of resistance above our heads. I think I'm probably going to close this position. Or maybe I'll close 75%. Keep a coda. Keep the old quarter open. I mean, we're up 42% on it. So it's free money. If we close 75% of the position, like just for simplicity's sake, let's say you put $100 in Bumble and it goes up 42%. You now have $142. So you can, if you put $100 in it, you can close 2/3 of your position, 66% of your position. You take back out your $100 and then you have $42 in it for free. So, you know, it's playing with the house's money at that point in time. So you could argue that you just leave open a quarter to a third of your position or whatever and just let that ride, you know, 40% even. You know, take out your initial investment and just let it ride. Not financial advice. I'm not your financial advisor. I hate bees. Buzz. Baidu breaking out of some key resistance, starting to look like it was going to actually make some moves here. Slight little rejection. Reclaim that key support level. I think this thing gets continuation. I like this for the long game, honestly. Even if it chops sideways here for a little bit or even sells off a little, I think we're getting a nice. This is slow and steady move right here, which is what I want to see out of this thing. I don't want to see it just burst up real quick because I think it's less probable to like hold. Had a nice sell-off to key technical levels. I like Baidu. This is probably going to be, I think, I don't know how, I haven't decided how I'm going to do the new portfolio that we're doing for the new series. Little retirement portfolio that we start building together. I think I'm going to do, basically you can do 6,000 per year, tax-free in a single IRA. So that works out to $500 per month. So we'll just say we put 3,000 into it this year. So we'll like put 500 over the next month, 125 a week, depending how we break it up. So, I want to have some, foreign investments, some, at home, some in different areas of the market. So I think probably what I'll do is I'll pick a couple good American stocks, and then I'll probably do either Baidu or Alibaba, and probably some Canadian pot stocks to give us a little diversification. So we'll have some Asian markets. We'll have some Canadian markets, and then some Americano markets as well. Decent little bit of diversification geographically, and then do probably a little bit into tech here, a little bit into our commodities, obviously with the pot stocks, and then I don't know where else we'll be at. Maybe energy. I don't know. We'll see. I think energy is going to perform poorly for the rest of the year at least, but long term there could be some legit positions. We'll see. I'll do a little bit of thinking on it. It's going to be tough to get above this support right here though, but I think Baidu and Baba are basically looking the same. They're taking off slightly. By taking off, I mean they're creeping up from our entry points, which is good. Extremely technical. Very, very, very good looking charts in my opinion technically. Again, tough spot to get above here. We could easily chop sideways or sell back off a little bit, but after that we're going to just start, we're going to do the reverse slinky and start climbing stairs. Neo, you guys know how I feel about Neo. Really missed that one. Missed it. But it is what it is. It's creeping up here. It's moving up. Moving on up. Maybe at new highs here pretty soon. We're up at a key technical level. We're at the 886 of that sell-off in blue. Are we? Oh, I think I theoretically put in this fib. We're at a made-up fib level that doesn't actually have relevance. There we go. That's better. So 786 would be a couple more bucks up. 57. I mean, this thing is strong. It still looks good. Potentially gonna pop up here again. I really think it gets up there. There's quite a bit of resistance here though. I mean, it could easily pop up another 10% or so. We'll see. This thing's strong. It's probably one of the best performers. Peloton, it's at a pretty heavy resistance now. Hanging on though. We'll see what happens. It's at the 6182. Maybe it gets up to the 786 and then tops out. Maybe it tops out right here. We'll see. I think this thing probably continues on up. I think more likely than not it gets to 144. Another 20 bucks to the upside. I'm not in Peloton. I'm not interested in Peloton, but hey, can't always be right. But again, I've seen what happens to like exercise equipment fads, so I'm definitely biased on the fundamentals. A couple other things that make me want to keep my hands off that one. I don't want to get sucked in, if you know what I'm saying. Apple is looking good. Retesting that key level here from that previous little high. So you could argue now that we got a low, we got a high, we got a higher low. We're busting through, about to put in a new high. Still an internal retracement for now, but looking juicy. Nice little breakout, already up a couple percent. I think, honestly, there's not a lot of resistance above our heads. If we clear this level, which could be tough, because we got a resistance here, a resistance here, a resistance here, this resistance here, and now where we're at right now, could be tough to break above this level. Plus, we got that white trend line. I mean, we might, man, Apple's probably topping out here. Are we going to top out right there? I think we are. God, that's just so much confluence right there to get rejected. It really is. But I mean, do we just get rejected though and come back down to our entry, to our breakout, to our, key fib level at the 0.5 and then just keep creeping up? I think more than likely. At this point in time, I want to see Apple pull back and hold another higher level, and that'll look good. I don't think it's just going to keep creeping up here and just bust through to the 886, new high, all-time high. I really think these tech stocks are going to run into trouble very soon. I don't think rates are just going to go back to zero. But who knows? Maybe they will. Excuse me. Sorry, should have covered the mic for that. Zoom, breaking out of our little channel here. Obviously a profitable trade. We did take some profits at the top of the range, but it looks like we're maybe going to get our second target here, which would be a nice little 86%. 40% looked good. 38% was nice, but 86 looks better, guys. Nice little perfect little bottom pick right here, entry. It didn't do us dirty like the old what was it? Oh, Neo. But yeah, looks good. I mean, breaking out of the top of that channel. I mean, maybe. Man, do you draw that slightly different and it's not breaking out? Let me see. No, I think no matter how you look at this, it's breaking out. Yeah, it looks good. It really does. I think we get this continuation move. There's probably enough meat on the bone here too for a add to the position. There really is. Man, that's wild. So much. This is still juicy. I mean, even with like a 7.6% stop loss here, you got 34% to the upside. That's probably one I'll be adding on to. That is juicy. Still. Let's look at let's check out a little fib internal retracement over here. See what we got going on. Oh yeah, we're at the 0.5 now. So if we get rejected here, get a nice little entry off that retest. Maybe down here at that 382 if we're lucky. I mean, I don't want to miss it, but I feel like there's definitely a trade to be had there. And then get the move up to the 786. Yeah, that looks nice. It's a very nice. I like this. I like the zoom. Maybe it just rolls over and dies, though. We'll see. Sell, buy, sell, buy, sell, buy, sell, buy. Looks good, though. I like it. Video conferencing, not going anywhere. People can get real tired real quick of going back to the office, and they're not going to be traveling, halfway around the world to shake somebody's hand. It's not going to be like it used to. It's never going back to normal. We're in the new normal, and Zoom is part of it. Shopify. Broke out, all-time highs, coming back down, retest. This thing's strong, but does this level hold now? We broke out, retested it. Does this hold, or does it break back down? Bunch of red histograms, about to get the hard sell signal, about to leave the bullish control zone. Shopify looks like it's about to take a dump. We'll see, though. I mean, I don't know. It looks like this could easily roll over and get rejected on the weekly. Daily looks weak. Weekly looks decent. Monthly looks weak. This is a hard sell signal and potential divergence developing here at new all-time highs. I don't know. Yeah, this thing looks like it's about to... This could really die right here. We'll see. If it gets continuation, it's bullish. If it rolls over, it's bearish. I would not want to take an entry at this level after it's literally just done nothing but go parabolic since 2016. But I don't know. We look into this a little bit more. I imagine it's probably trading at ridiculous valuation. Like PE ratio, even, I don't even know. We'll have to, I'll look into Shopify a little bit more. I don't see anything now. It looks like it's about to sell off. Look at the last time it topped out and sold off. I mean, it had a juicy dump. Oh yeah. That's the kind of dump you get divorced over. 32%. You leave one of those floating, you're in trouble. It comes back down to the 200 moving average though. That's a buy down here at like 11 something, but it could do some damage. Etsy, we're getting that breakout. This thing is trading fairly technically. We didn't quite get the measure move we were expecting. I haven't charted this one for a while, but definitely broke out of that key level. I mean, if this is what we're looking for Bumble to do, we want the old Bumblebee, the old Buzz, the beast thing. Come up here, retest, hang out, and then burst to the upside. Does it happen? Probably not. Could it though? I mean, the measure move of this channel is basically just the all-time high again for either a double top or new highs. I was hoping this thing was going to go way lower, but it did not happen. People are loving their little arts and crafts, selling those little popcorn necklaces, or I don't know, whatever you sell on Etsy. Whatever people buy and sell on Etsy. I always thought Etsy was like a scam. Like, apparently, like, home crafted goods are just doing well here, because Etsy's looking strong, guys. Maybe you're a seller on Etsy. Tell me about it. What are you making out of clay and selling on Etsy? What kind of art are you selling on Etsy? I don't know. Maybe I'm just judging Etsy. I don't even know what they sell on there. Can you buy anything on Etsy, or is it home crafted goods? What does your wife sell on Etsy? I'm just assuming it's an all women's selling platform. That might be sexist though. But according to my statistics, there's only one person I have to worry about offending. ARKK, back to old Kathy, would you wanna? Man, this thing got a little break out of the channel. Let's turn off the moving averages. Getting a break out of the channel. Better part of the measure move. We're at 618. A lot of resistance here. Maybe we hang out here. We already hit our initial target. Nice little 15% to the upside. I mean, this thing is just underperforming. I would rather make 40% and get stung by a bee than make 15% and have to admit that Kathy Wood is right in the short term. Maybe it makes it up here and sells off. These things have been underperforming. This is ARKK. Let's look at ARKQ. ARKQ is underperforming even worse, isn't it? Yeah, it made it up to the 618. This one's at the 0.5, and it's running into a bunch of resistance. Man. But she did file for a Bitcoin ETF, so that's good. Hooray. All right, that's it for tech. Jump back over in the comments real quick. Take a little scissor, and then we'll finish off with our commodities. Nice. Did not miss anything. At the 2 hour and 37 minute mark, should be able to finish this out in 20 minutes. Gold getting a little dead cat off the 377. Technically putting in a higher low for now. Bearish control zone, potentially exiting, getting a hard buy signal. Couple of green histograms in a row, well below the 200 exponential and simple moving average. Now our slope to the downside. Gold on the daily, I mean, could have some upside, but looks bad. Gold on the weekly, about to get the 821 cross again. Last time we got the 821 cross, we tried to save it. Got to push up and then rejected. Do we get another push up, try to save it again, and just get a lower high and then rejected? Man, maybe not this time. We got rejected exactly off the slope line here. This is what I'm talking about all the time. The rejection off the slope line. All red histograms. Left the bullish control zone. Stokes are sloped powerfully to the downside. Monthly, we could not save price action and get an open and close above the 8. Coming back down to 21. Hopefully that holds at 1728. If it doesn't hold, man, gold is going to go back down to like 1550. It looks a lot like what happened back here. Man, I mean, it looks like it's getting ready to do one of these deals. Got a little downslope, a lower high, and then a cross and death. Downslope, lower high. Man, I think gold's going to be stuck in this range between 1800 and 1728. I think gold just cruises around in that $75 range for like the next month. and then just sells off. Man, that looks terrible. I think inflation, look, the inflation argument is like dead at this point in time. No one's even thinking there's going to be inflation anymore. Before, everybody said inflation, inflation, macro, hyperinflation, it's only inflation, it's all inflation. And your boy was over here talking about deflation the whole time, and people are like, that doesn't even make sense. There's no such thing as deflation. You're dumb. And here we are. Looks like somebody agrees with me, because gold looks like not good. Silver, slightly more bullish than gold, hanging on to the 200 exponential and simple. We hang out here long enough, though. Where are we going? We're going to break through it. We're eating through that support right now, getting a little pushback to the upside, trying to move out of that bearish control zone, maybe get a hard buy signal short term, but according to the daily, which we were already on, it still says the same thing. According to the weekly, though, well below the 21. We have not crossed the 821 on the weekly this whole time. We were able to save it. And now here we are back below it again. Previously, when we went below the 21, we never opened and closed below it. Never opened and closed below it. We did open and close below it back here, but we were able to save it. So can we do it again? Can we save it again? Or is this the kiss of death? I mean, which is only like $24.50 for our next target, but silver does not look good. I mean, it looks better than gold, but it does not look good. It does not look like the silver squeeze is working, guys. It does not look like the world is out of silver, guys. Looks like it got rejected hard at this area right here. And it looks like all the little silver squeezers in the whole world can't break the manipulation. It's manipulated. They're squeezing our silver. There's no more silver, guys. Hodl. Yeah, I don't think so, bro. Gold silver ratio just going sideways still. I mean, bunch of green histograms in a row above the slope line. It looks like this thing's going to move to the upside eventually if it stays there long enough. On the weekly, looks bullish. On the monthly, looks bullish. Green histogram now. First green histogram in the bearish control zone. So bears are still strongly in control, powerfully in control. The bears are still running the show, but could easily get that cross on the Stokes hard buy signal and a bursty burst to the upside. According to this chart, I would rather have gold than silver right now, in the near future, for the next few months at least. XPT, platinum, got a nice little reflex rally off the 377 perfectly, to the touch, to the T, like a glove. Could not stay above the 200 exponential or simple moving average, though. Looks like we can get continuation to the downside. Couple green histograms, but man, does not look great. Weekly is just bouncing that perfect bounce off the 377 528 weekly, but bunch of red histograms. Man, this thing looks like it got the cross to the downside on the 821 for the first time. Oh man, this thing looks like it could drop. I mean, I want to see this $100 area or $1,000 area hold, but I think we could easily test down here to the 200. I think 950 to $1,000 is probably a buy zone, but I don't know. Maybe this thing just dumps. Could not get above that 200 simple. I think it's going to get stuck between the 200 simple and 200 exponential. So, but I mean, man, 900 to $1,000. It's the percentages on this just aren't particularly great. Multiple red histograms in a row. I think this thing goes sideways to down for a little while here. USAS, man, broke down back to like that support level, got a little bit of a bounce, but it's hard for me to, I mean, there's some bullish divergence playing out here, but it's hard to get bullish on this when the silver and gold chart both look bad. Same with First Majestic. It's hard to get excited about this when silver and gold look bad. It looks like realistically we're probably going to put in a new low on this thing. Showing a little bit of strength, bouncing the 200 exponential and simple. It's just a big descending triangle, though. We'll see. ACB, yeah, I'm looking to add to these pot stocks probably in the long-term portfolio. Again, we could sell it back off here a little bit, but overall, I mean, they're starting to look pretty freaking good. Hard buy signal right here, showing a little weakness. I think the continuation still looks good. We'll see. I would expect this to bounce and keep that blue slope line. If it breaks down from that and starts showing weakness, you know, maybe I'll change my tone, but all green histograms on this, on the monthly. Um, yeah, ACB looks pretty good. Tilray looks pretty good. About to get the hard buy signal again. Bouncing the 0.5 perfectly. Going to be adding to this position right here. I'm still massively bullish on these, on the macro. Maybe we do come down here to like 10 bucks though. We'll see. Hard buy signal on the weekly. Blue slope line. We're slightly below it, but showing some strength. All green histos. It's not too much bearish case for this. I mean, it looks like it's trading pretty technically as well. So, CGC, canopy growth. This one is a little weaker, but still looks decent on the daily. On the weekly, looks fairly decent. Could come down here a little lower, but bounce in a technical area. On the weekly, I mean, hard buy signal, couple green histograms in a row. I think these pot stocks want to take off. There's a lot of weakness in commodities right now. I mean, this monthly chart doesn't look as good though. You know, got the hard buy at a key level back down here at like 14, 15 bucks. Came up pretty nice, topped out, showing weakness. But I mean, it's back down at the 0.5 now. So does the 0.5 hold? Do we come down to the 618? I think we might come down to the 618. 1860. Couple red histograms getting rejected off the slope line. Canopy probably looks the worst out of any of these, but they all look pretty good. THCX, just like a weaker version of the same. Little more diversification. YOLO, same thing. Bunch of other crap in this other than pot stocks, but still looks decent. Uranium all looks weak. Looks like it's selling off, getting a little dead cat bounce. Overcrowded trade. It's in the bearish control zone. We could see this rally out of that bearish control zone. Last couple times it got a nice little rally, but the 821 have crossed. We're down below the 89 for the first time since this run started. You know, we basically broke out from the bottom, kind of went sideways here. Every time we bounced the 50, 55, bounced the 89 right here on a wick. Now we're well below the 89. So next target's a retest of 228. UEC, Uranium Energy Corp, still massively bullish on uranium long term. Short term though, does not look good. Still does not look good. URA, Uranium ETF, hard sell. We could find some support here. Broke down below that fib line though. Broke down below the 50, 55 for the first time since this massive bull run from 11 bucks up 100%. So, you know, what's it do? Probably test the 89, 20 bucks, maybe 17, the 200s. Buying opportunity though, in my opinion, when this thing sells off. When it starts to put in a bottoming formation on longer time frame, that's definitely going in the longer portfolio. That I think uranium and copper and pot stocks have some serious potential for retirement fund. Maybe less so pot stocks, but I think uranium and copper and like some of the industrials, Caterpillar, Deere, some of them have some serious place in the retirement portfolio and will definitely make their way in there. Matter of fact, you know, Deere and Caterpillar are a little more blue chip, which I like for a good base. Uranium stocks, something like Cameco in there, you know, but just not right this second. They don't look like great entries right now, any of the ones I just spoke about. This looks like it's breaking down from a key pattern, you know, this channel that it's been operating inside of. It was a very clear channel, broke down from it, tried to break back into it, couldn't hold it, could get that measure moved down here to like 14 bucks. But again, you know, I'm looking at this as a buying opportunity, like long term. Wherever this sells off to, I'm looking to be a buyer once it starts putting in a bottoming pattern. But again, it looks like it's about to get the hard sell on the weekly. Bunch of red histograms in a row. Let's turn on the moving averages. We're probably about to cross the 821. Oh no, not quite. Still got a little time on that. So moving average wise, still looks good on the weekly. Monthly looks a little toppy, but we could easily see sideways action and then another push up here. We'll see. I mean, this is the end of the monthly candle. We'll see. Yikes. Copper, little short-term move up here, but broke down from that key channel. You know, I really expect copper to sell off here. Long-term, very bullish. You know, I really want to get a buy somewhere down here in like $21, somewhere around there. This is CPER, just a random index. There's a bunch of other ones that I look at too that are potential, but bunch of red histograms, hard sell signal on the weekly. This thing looks like it could easily have downside. You know, I'm looking for this at like 24 to like $20. Again, monthly does not look particularly great. There's an argument that it could hold or go sideways here, but sound like, what's that? Roddy Rich? When you say down below? I don't know who that is. Roddy Rich? Well, I'm not sure what the reference is. Copper, massively bullish on copper and uranium long term though. Same with lithium. Uh, lithium looks like it's about to break out to new highs on this. This is just LIT. This is an internal retracement though. This is not all-time highs. This is like, oh wait, it is. Oh, sorry, that was an extension. So yeah, okay, we topped out of the 1.382 extension. So it looks like we're getting ready to creep up to, this is a battery ETF. Looks like we're, next target's $85. After that, the 1.618, $98. So there's definitely still some room for this to the upside. Looks like it wants to come down here, do a little bullish reset on the monthly, and then see continuation. Weekly looks bullish. It could definitely put in some bearish divergence here, though. Could definitely put in some bearish divergence. There's an argument this comes back up, double tops, and then dumps. We'll have to wait and see how this plays out. Daily looks decent. It's, again, I wouldn't want to be a buyer here, but, I mean, gosh, there's no more. This looks like it's about to be topped out. I'd want to see where this is at a couple weeks or month from now. Lumber futures still selling off here. Another bearish candle. Not looking so good for the old wood. Hard buy signal, but did not exit the bearish control zone. Mixed signals on the histograms here. Daily looks weak. Weekly looks, yikes. Weekly looks terrible. Oh man, look at all those red histograms losing the slope line, hard sell. But the monthly looks even worse. Look at that big old red candle just crushing your dreams. I mean, if you're a lumber holder, if you're a lumber liquidator, I mean, this could be the bottom here though. There's the 618. You got that previous little top right there. There's a strong argument for like a 1, 2, 3, 4 retracement and then a 5 Fibonacci extension here. I mean, I don't know though. It's going to be tough for lumber to put in new highs again. Man, this looks like it's topped. But based on this candle alone, I would say that is a wrap for lumber. I don't know. Maybe they're like making houses out of hemp and clay now, and like lumber is dead. According to this chart, I would say that they're probably making hemp and mud houses, and lumber is dead. Or everyone that has a deck, everybody that wants a deck has a deck. It looks bad, man. Lumber's bad, man. I'd rather be a lobster holder at this point in time. Caterpillar, we hit our measure move perfectly. Got that little dead cat bounce. We'll see what happens now. I think it's going to get continuation to the downside, but bunch of green histograms, hard buy signal, come out of the bearish control zone. All the moving averages above our head, though. It's going to be tough getting back above that area, but like long term, I still really like this. But I mean, look at this. Look at this bearish divergence signal. A bunch of red histograms below the slope line. About to lose the weekly slope right here. I mean, if we can get back above the 8 at like 222, there's an argument we see continuation, but I think this thing's topped. I mean, let's turn off the moving averages here and look at what's happening. It looks like we're just getting a reflex rally off of key fib levels and that moving average. I mean, look at this. Looks like our breakdown previously from our little channel before. Although we got a throw over, you know, or a parabolic high on the previous time, we came down in it, couldn't get back out of the top, broke out the bottom, tried to get back inside the pattern, couldn't, and then sold off 50% over the next like year, year plus. Now here we did the same thing, a little less bullish, and then we broke down out of the pattern. So do we come back up and try to get back in it again? I think we probably do get a reflex rally back up to like as high as like 240, maybe even a new all-time high, put in some divergence. But I mean, this thing looks like it's getting ready for like a 40% retrace. I mean, looks like it could easily be putting in, man. I mean, you could argue that was a 1, this is a 2, that's a 3, that's a 4, and then we're putting in the 5. Does the 5 have to be done? No. Is it probably done though? Yeah, probably. I mean, on our monthly, this was a clear bottom right here, a clear top. So you could argue that was our 1, and then a clear bottom right here. That was our 2. So here's our 0. Here's our, matter of fact, wait a minute. We've got tools. Stop being a tool and use your tools. We could argue something like this has already taken place. Now there's 2 ways you could look at this though. You could say this is still part of that 3, and that was just the 3 breaking down, and then we're going to come down here for the 4, somewhere like that. Or you could argue how I'm about to draw it now, where, you know, this is essentially, I don't know if I've done, did I do a Fibonacci extension on this previously? Let's look at this. Let's take a little deep dive here on the old Caterpillar. So if we look at we're taking a retrace from the 1 to the 2 to get an extension, that's the 1.5. So it topped out the 3 potentially at the 1.5, or let's say we're wrong and this is really going to be the 3 up here. Maybe the 3 goes all the way up to 420. Got him. But probably topped out at the 1.5, honestly. And then if the 3 sells off down here to the 618, which I can't remember, what did this one sell off to? I feel like we might have looked at this before. Sold off down in between the 382 and the 0.5. This one sold off to the 618 perfectly. Tells me that probably is it for the 3. And then let's see what our Fibonacci extension is, and then let's measure the distance and see how realistic that is. Oh, it's already in there. Duh. How about we look at the actual chart, because it's there. That's our 1.5. So yeah, we topped out at the 1.5 right now of this Fibonacci extension. We topped out at the 1.5 of this Fibonacci extension. So, I mean, we probably did. That probably is a top. Let's measure this. $98 for the 1. $118 for the 3. So that's already a valid 5 wave. And $156 for the 5. So yeah, this might be topped out, ladies and gentlemen. That might be a brat for now. If it is, maybe not though. Maybe we're just looking at it a little too. We'll see though. We'll see in time. If it is topped out though, let's make this one blue. Oh wait, do we already have a blue one? Let's make this one white. I mean, we could easily see this thing sell off heavy. I would love to get some more cat down at like $138 or 97. I don't know. That might be unrealistic though. But I don't know. Last couple times we lost like 40 to 50% of our value. So it's not unrealistic to think, you know, 40%. It's not unrealistic to think this thing could lose 30 to 40% of its value, or at least 25% of its value. So yeah, I think we're going to find a good, I think if we're patient with Caterpillar, we will find a good entry for a like long-term retirement account position. And same thing with Deere. I'm not even going to waste my time doing all that extra charting, but you know, we have broken down now from that key channel. Trying to come back up here to retest it. Didn't get up there yet. We could easily have a further push though. Bunch of green histograms, hard buy. This thing is much more bullish than Caterpillar, at least on the short term. On the weekly though, looks terrible. Looks terrible. Divergence signal, sell by sell, top of the range, broke down from that key level. Bunch of red histograms, about to lose the blue slope line and well below it. Monthly has a red histogram. Looks like we're preparing to exit the bullish control zone, potentially get a hard sell signal. If we get this measure move plays out too, yeah. I mean, yeah. But yeah, I think that's going to do it for today, guys. How'd we do? 2 hours, 59 minutes, and 37 seconds. What? We did it perfectly. So just for the record, you have 13 seconds to say goodbye, ladies and gentlemen. No, not literally. I'm just kidding. But yeah, just a reminder, it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research. Trade responsibly. Appreciate all the members. The group is now open. If you have not responded and are interested in the group, or I have not responded to you and you're interested in the group, reach out to me. Yeah, for sure. If you're interested in the group, let me know. If you're not, don't let me know. Or you can just reach out to me to let me know that you're not interested in the group, but I feel like that's a waste of time for me, so probably don't do that. If you have any recommendations, requests, anything like that for next live stream that will be on Sunday, let me know. Talked about a couple things we're probably going to be adding to this week. What else? Yeah, I think that's probably it. Going to be doing some static videos, which will be probably once a week for the retirement or IRA series, and then probably I'll put them together or do like a collection of them once a month for that, and we can kind of track it as we go, see those mad gains start to stack up, and you know, maybe hopefully encourage people to, you know, start an IRA or retirement fund, or, you know, invest in themselves, their future, so that one day they don't have to work for the man. Yeah, I think that's pretty much it. See everybody in the Discord, all the group members. Appreciate everybody that has showed up, signed up, joined up. Definitely we'll get it rolling here soon. Obviously still getting everything set up, building up those resources. Going to start just posting them in there. Going to start doing some live streams just for the group members or with the group members as well, at earlier times in the day, so they're available to everyone. And then also I will go through all these assets slowly but surely and start posting up long-term charts with targets, key levels, etc. Static charts in the group as well for everyone. If you have specific stuff you want to see also, just reach out to me, let me know. But we don't need to talk about that here. We can talk about that in das group. Appreciate all the likes, subscribes, shares, share it on social media, share it where you watch it. Tell your friend, tell your wife, tell your mother, tell your cat, and definitely tell your dog. Yeah, I think that's it for today, guys. Appreciate y'all. Manny, good to see you, my man. Oh, okay, a rapper, Bubblies. Yeah, I'm not familiar with him. I'll look it up, but I'll mute it first. Nah, there's some rap I like, but not most of it. Most of it I think is trash. Old school rap and stuff like that I like. Back when it was like legitimate and you could understand what they were saying. Like, honestly, I like all music as long as it's good. But most music now sucks horribly. Yeah, appreciate you, Manny. Definitely. Thank you, brother. Appreciate you, activity. Appreciate you guys watching, viewing, hanging out, cutting up, having a good old time. I had a good time. I hope you had a good time. Hope you learned something. Hopefully you're making money. Hopefully, good health, good wealth. We got the 4th of July coming up this weekend. I'm excited for some serious fireworks. Man, that Sunday stream could get wild. I'm not going to lie. Sunday night might be nuts because people go crazy with fireworks down here. So it's probably going to be a shit show. So expect explosions all stream long. But yeah, happy Independence Day to anyone and everyone. Have a good weekend. Excited for some UFC fights coming up. Conor McGregor, Dustin Poirier 3. Man, that's going to be a banger. I'm excited. I hope the old Conor shows up. Still not sure who's going to win. If the same Conor shows up, I think DP puts it on him. That was a great last fight. I'm excited for this fight. And honestly, man, there's definitely some cool fights coming up. Some good fights coming up. If you are not a UFC fan, you probably have no idea what I'm talking about. If you are a UFC fan, you definitely know what I'm talking about. So, but yeah, that's going to wrap it, guys. Appreciate everybody showing up today. Hope you had a good time. Hope you're making that money. See everybody in the group. And yeah, that's it for tonight. Crypto Trend Trader with our Wednesday midweek market update, 11 p.m. Eastern Standard Time on 6/30/2021. Crypto Trend Trader, and I'm out of here.